So let's continue. The next standard that we go is, let's go to AS28, impairment of assets. Okay. Okay. Now, first of all, it's an asset-based standard only. Okay. Let's see the scope of the standard. So, what is scope? Scope talks about applicability. Correct? No. This is applicable for all other non-applicable assets. First, let's understand AS28 is not applicable for inventories. This standard is not applicable for inventory because we already have AS2. Not applicable for construction contracts because we have AS7. Investments that are included in AS13, they already have AS13. No need to come to this standard. Then deferred tax assets, AS22. Yeah. So for these four things, the concept of impairment will not apply. Rest all other assets, especially non-current assets, impairment is applicable. Okay. Now it is very important to understand what is impairment first. Okay. First of all, what is impairment? Okay. If the carrying amount of your asset is greater than recoverable amount, then it is said that your asset is impaired. Correct? Recoverable amount andre no, the amount that you can recover from the asset. The amount that you can recover from the asset by using the asset or by selling the asset is only 3 lakhs, but you are valuing that asset at 5 lakhs. Is that correct? No. Barade 3 lakhs is how can you value at 5 lakhs? Now it is said that the asset is impaired. Okay. Now you have to book impairment loss. How much impairment loss you have to book? 5 lakhs is the carrying amount, recoverable amount is 3 andre. You have to book an impairment loss of 2 lakhs. So basically that is what we are doing in this standard. Okay. So when to do this impairment? Every year we'll do impairment testing. What is impairment testing? When I say impairment testing, checking whether carrying amount is greater than recoverable amount. Every year you do this. No. You have to do the impairment testing only when there is indicators. We have two kinds of indicators, external indicators and internal indicators. Okay. So whenever this happens, you are supposed to do impairment test. That means checking whether CA is greater than RA. So what are these indicators? External indicators, there is significant decline in market value. Significant decline in market value of what? Market value of the asset. Now if market value decreases for your particular asset, then it's an indicator. Oh, I think my asset would have decreased because market value has declined. No, immediately you have to do impairment testing. Second, if there is any changes in technology, market, economic or legal environment in which my business is working. Some big changes happened. It can be technological. Some new technology came into the market. Or legal. Some new legal amendment has happened. Okay, all these possibilities. Something happened and it is affecting my business. Now imagine suddenly one law came and law told that you are not supposed to produce this particular product, or some other legal change has come because of which it is very difficult for me to earn money. Correct. If it is difficult for me to earn money, then it is also difficult for me to recover the benefits from the asset. If I am not able to recover the complete benefit from the asset, then what will happen? Recoverable amount will decrease. So some changes happened in legal environment. Now I am not able to get economic benefits from the asset, because of which recoverable amount will go down. That's why we are supposed to do impairment testing whenever there is change in technological environment or legal environment in which we are working. Okay. Third, increase in market interest rates. If the market interest rates increases, okay, then you have to do a impairment testing. Why? If market risk increases, why we have to do market impairment testing? Anyone? Because if you remember our impairment test, How will we find out recoverable amount? Recoverable amount is lower of value in use or NRV, correct? It's lower of value in use or NRV. How will you compute value in use? Basically, you'll take all the cash flows that you get from the asset and you will bring it to present value. To bring it to present value, what you have to use? One rate you have to use, no? Alva. Whenever that rate increases, no, value in use will decreases. Discounting rate ಜಾಸ್ತಿ ಆದಷ್ಟು present value ಕಡಿಮೆ ಆಗ್ತಾ ಹೋಗುತ್ತೆ. Correct? No, that's why if your market rate increases, then your value in use decreases. That is an indicator for us to do impairment testing. Then carrying amount of net assets of the entity is more than its market capitalization. Okay, your market value, basically to keep it simple, your market value of the company is lesser than the book value of the company. Generally it's vice versa, no? Market value of the company will be greater, book value of the company will be smaller, but ulta has happened. What is happening? Book value is greater than market value. How come? Generally market value is greater than book value. So henceforth, whenever you have that situation, you have to do impairment testing. All these are external source of information. Internally, obsolescence or physical damage. Some physical damage happened to my asset. Then will I be able to fetch the same value? No. That means what I have to do? Immediately I have to do the impairment testing. Significant changes in the use or expected use of an asset with adverse effect on entity. Andre, you thought, say suppose you have bought a PPE, okay, you thought it will produce this much units, 20,000 units, 30,000 units every year it will produce. Ante you had estimated. You had estimated that it will produce 30,000-40,000 units, but maybe some changes have happened in your usage. You are not able to use it the way you intended to use it. Now if that changes, your recoverable amount also changes. Yes. If you were able to use it the way you intended, then you were able to produce 30,000, but that way only changed, no? Then immediately what you have to do? Impairment testing. Internal reporting indicating worse economic performance. Internal reporting, every year, every month, what happens, no? Within the company only, employees will meet and they will discuss, no? How is our performance, etc., etc. In that meeting, in that MIS report, they have told, this asset is not performing according to our expectation. That means what? If the asset is not performing as per our expectation, then recoverable amount would have dropped. We have to do impairment testing. These are the internal and external indicators of and whenever this indicator is indicated, then immediately you have to do impairment testing. Did you understand? Only when there is indication you have to do impairment. Simply annually you cannot do. There are only 3 items, okay, totally, on which you will do annual impairment. Generally, for all other things, what you have to do? Indication iddaga impairment madbaku. But for 3 items, you will do impairment annually, even without the indication. Which are those 3 items? Remember, it comes in your intangible asset. You can note it down here. 3 items. Okay, one we already know from yesterday. Intangible assets were useful life. What was the rebuttable assumption for useful life yesterday for intangible asset? 10 years. But if you take more than 10 years, what did I tell? If you take more than, it is possible to take more than 10 years. If you take more than 10 years, then you have to do annual impairment, even without indication. Aita? Okay, sir. Next. Then you have an intangible asset. Okay. Which is in so here only we have no intangible asset with an indefinite useful life. Correct? There are some intangible assets which does not have fixed useful life. For example, goodwill. When I say goodwill, what is the useful life of the goodwill? Can you tell me? If you cannot tell, okay, can you do amortization for that intangible asset? Is it possible? Because to calculate amortization itself, you need a denominator. In denominator, you have to put useful life. But if that useful life is indefinite, it is infinity, how can you calculate amortization? So amortization concept is not possible for intangible assets which has indefinite useful life. So in that case, what will you do? You are supposed to do annual impairment. Aita? Because they don't have useful life only, indefinite, infinity useful life. Then intangible asset not yet available for use. To put it simply, intangible asset which is under development stage. Correct? You know, yesterday when we are only developing intangible asset, we have divided it into research phase and development phase. That intangible asset which is there in development phase, no, that will be tested for impairment annually without any indication. Intangible assets under development phase. Third, that goodwill acquired in business combination. You know, you have amalgamation. You are acquiring another company, and that time one goodwill will arise now under AS 14. That goodwill is also tested for impairment annually without any indication. Okay. So, what did you understand? For these three items, you are supposed to do impairment annually. What are these three items? Intangible asset, which has indefinite useful life, because you cannot calculate amortization. Second, intangible asset, which is under development phase. You will do impairment annually. Third, for goodwill that you have got during the acquisition of the business. These three intangible assets, you will do impairment annually even without indication. Clear? Now let's understand. So first of all, what is recoverable amount? Carrying amount we know. Carrying amount is the value at which we are carrying that particular asset in our balance sheet. What is recoverable amount? Recoverable amount is value in use or fair value less cost of disposal. It's almost NRV only, but they've just put the explanation of NRV directly. Fair value less cost of disposal. Whichever is higher. Why these two we are taking as recoverable amount? Because whenever you have asset, two ways you can recover money. One, by using the asset, that's why we are taking value in use, and one more by selling the asset. That's why we are taking fair value less cost of disposal. Fair value on the fair value of the asset today minus costs of selling. Both you will take. Whichever is higher, that should be the recoverable amount. That recoverable amount you will compare with carrying amount. If carrying amount is lower than recoverable amount, for me it is okay. But if carrying amount is greater than recoverable amount, what should I do? Immediately book impairment loss. Clear? What is recoverable amount? Higher of value in use or fair value less cost of disposal. Clear, guys? Now, the question is, every time when you are finding out recoverable amount, is it necessary for you to find out both value in use and fair value? Every time? No, certain exceptions we have. Generally we have to do that only. Every time you have to calculate both, see whichever is greater. But some situations they have told where you can do only one and still find out the recoverable amount. Okay, let's see. One simple thing is, now say suppose you are doing impairment test. You first found out fair value. That's why you first try to find out VIU. What is VIU? Value in use. Calculate madak hodri. This VIU that you calculated is already more than carrying amount. Okay, say suppose your carrying amount is 5 lakhs. You tried to calculate value in use and value in use has come to 8 lakhs. Okay, now tell me, is there any need for us to calculate fair value? No need only, no. Because imagine, if fair value is greater than 8 lakhs, say 10 lakhs, we will select 10 lakhs. And if recoverable amount is 10 lakhs, asset is not impaired because carrying amount is 5. Correct, no? And if fair value is 6 lakhs, then I will select recoverable amount as 8 lakhs. Still the asset is not impaired. In both the cases, see, you understood the point, no? You got value in use. That is coming to 8 lakhs. That is already higher than carrying amount. Now, no matter what is fair value, Alva, this is already greater than carrying amount. So, the asset is very clearly not impaired, no? So, that's why if you find out value in use and if it is already more than carrying amount, no need to find out the other. Vice versa. you found out fair value, and if it is already more than carrying amount, then no need to find out value in use. Did you understand? Matter artha? Okay. When net selling price would not be possible to be measured due to various reasons, the entity may use value in use. If you are not able to get that fair value less cost of disposal, then they are telling you can use value in use only as recoverable amount. If you are unable to find out fair value less cost of disposal. Then in case of an asset held for disposal, if there is no reason to believe that asset's value in use materially exceeds net selling price, asset's recoverable amount may be taken as NSP only. They are telling, say suppose there is this particular asset and that you have held for sale. If you have held for sale, then is there any sense in calculating value in use? Because value in use, when it will come? Only if you use the asset, but this particular asset now you have held for sale. So in that case they are telling calculate your fair value less cost of disposal. That should be enough. No need to calculate value in use. Why? Because asset is held for disposal. They will not use it only. I understood 3 now. What was the first case? Tell me. That is very important. Close the door. What was the first case? Tell me. Are we supposed to calculate both? Okay, first you calculate value in use. If you come to know that value in use is already greater than carrying amount, no need to find out other thing only, no? Because this thing is already higher than carrying amount. Now what is the other possibility? Fair value can be either more than VIU or less than VIU. More than VIU andre no problem. Ilge impairment agilla andre. If the fair value is more than VIU, in that case also it will not be impaired. Say suppose the fair value is lesser than VIU, then we will take recoverable amount as VIU only, no? In that case, asset is still not impaired. This example you understood, what I am trying to tell. That is very important. Okay. So we understood recoverable amount. How to find out value in use? I thought basically to tell it very simply, okay, let's not take time. Value in use is by using the asset, whatever value you get, that is value in use. Now say suppose this is the asset. From this asset, I'll take all the cash flows that I will get, and I will bring it to present value using a risk adjusted rate. Okay. Whatever present, I'll take all the cash flows from the asset, bring it to present value. That present value is called value in use. And how to find out your fair value less cost of disposal? Fair value, aram se you'll get it from the market. Subtract the selling expenses. That is the expenses that you have to incur in order to sell this asset. That you subtract. Aram se you got both the amount. Clear? Understood how we get VIU? Present value of the cash flows from the asset. So when you are taking those cash flows, some items should not be considered, some items should be considered. These cash flows I told, no? Ella cash flows from the asset? No, they have some guidance. Let us see it. See what all you have to include. All the cash flows that you get by using the asset, that you have to add. By using this asset, what are cash flows you will get, that you add. Then whatever cash outflows happens because of this asset, you consider that also, no problem. Then net cash flows to be received or paid on the disposal. Now this asset at the end of its useful life, what will I do? I will scrap it. When I scrap it, I'll get one value, no? That value also you are supposed to take in the cash flow while determining value in use. What all will you not consider? Very important. Any restructuring costs. Any restructuring which are not yet committed, that you will not take. Restructuring andre no. Right now you are in complete loss. Full loss or loss. Because various inefficiencies are there in your business. Now we have told, no sir, from next year we will do full restructuring. Everything we will bring in line, everything we will change, we will make the processes improved. We'll improve it. When we improve everything, our cash flows will become better. Right now it is very less because of our inefficiencies. But when we correct it, it will become better. That process is called restructuring. Now, can I use that better cash flows for the calculation of value in use? ಇವಾಗ ತುಂಬಾ ಕಡಿಮೆ ಇದೆ ಆಯ್ತಾ ಅವ್ರನ್ನ ಕೇಳಿದೆ ಏನಕ್ಕೆ ಇಷ್ಟು ಕಡಿಮೆ ಇದೆ ಸರ್ ಅದು ವೆರಿ ಇನ್ಎಫಿಷಿಯಂಟ್ ಸರ್ ಬಟ್ ನೆಕ್ಸ್ಟ್ ಇಯರ್ ವಿಲ್ ಡೂ ದ ರೀಸ್ಟ್ರಕ್ಚರಿಂಗ್ ಆಫ್ಟರ್ ದಟ್ ವಿಲ್ ಬಿ ಬೆಟರ್ now next year it will get better anta is telling. Should I consider that? They are telling this plan is there, no restructuring plan to change everything. If they have committed to that plan, maybe they have entered into binding agreements to do the restructuring, then you consider in the cash flow. But if they have not yet committed for the restructuring yet, ಅಂದರೆ ಸುಮ್ಮನೆ ಪ್ಲಾನ್ ಇದೆ ಅಷ್ಟೇ ಮಾಡು, ದೇ ಹ್ಯಾವ್ ನಾಟ್ ಇಟ್ ಕಮಿಟೆಡ್ ಟು ದ ಪ್ಲಾನ್, ದೇ ಡೋಂಟ್ ಹ್ಯಾವ್ ಎನಿ ಬೈಂಡಿಂಗ್ ಅಗ್ರಿಮೆಂಟ್ಸ್. Then they are telling don't include the better cash flows while doing the value in use. Did you understand? Only if you are committed for restructuring plan, consider the cash flows. If you have any cash flows that is improving or enhancing the asset's performance, don't include. Now you have incurred some money on this asset that will increase its economic benefits. Then they are telling this cash flow don't consider. Why? Because anything, any subsequent expenditure which increases the economic benefits of the existing asset is what? It's an asset itself, no? Did you understand? On an existing asset, I spend some money. That is increasing the efficiency of the asset. That means what? It's a capital expenditure. That expenditure I will however consider it as a asset. Then why are you bringing it here? Don't bring it here. All of you understood? Third, any cash inflows or outflows from financing activities. You know what is financing activities? Issue of share capital, issue of debentures, payment of dividends, payment of interest, anything that, any cash flows that is happening in the business because of financing the company. All those cash flows should not come in your value in use calculation. Then any income tax receipts or payments, that should also not come in your value in use calculations. All of you understood? Very important. Restructuring will not come. It will come if it is committed. Andre binding agreements irbeku that we will do the restructuring next year anta, or else it will not come in value in use calculation. All of you clear? Sir, which rate you have to use? The rate which reflects time value of money? Of course. That's why we are doing the present value. Very important is the second one. The rate which reflects the risks that the future cash flows will differ in amount or timing from the estimates. Every industry, every business will be having its own risk, alva. Now hotel industry, separate risk, alva. Tourism industry, separate risk. Some education industry, separate risk. Now this rate which I am using to discount should reflect the risk of my particular business. Aita, the risk adjusted rate. Okay. Sir, when an asset specific rate is not directly, what they are telling, no. If you are doing impairment testing for this asset, then to discount the cash flows, you have to use the rate which reflects the risk of this specific asset. ಈ specific asset the risk ಏನಿದೆಯಲ್ಲ ಅದನ್ನ ರಿಫ್ಲೆಕ್ಟ್ ಮಾಡೋ ರೇಟ್ ನ ಯೂಸ್ ಮಾಡಬೇಕು ಅಂತ ಹೇಳ್ತಾರೆ. But if you are not able to find out that rate, then they have given us other options. What? You can use weighted average cost of capital, WACC, as we have learnt in our financial management. If you don't have that asset specific rate, if you are not able to get it, then second preference is you can use weighted average cost of capital. Or you can use entities incremental borrowing rate. We learned yesterday what was incremental borrowing rate. If I have to take a borrowing today, extra 1 rupee of borrowing today, how much interest I have to pay? That borrowing rate is called incremental borrowing rate. Or any other market borrowing rates I can use for bringing it to present value. First preference is for risk specific, that asset specific risk discounted rate. Understood? ಆ ಅಸೆಟ್ ನೀವು ಯಾವ್ದು ಇಂಪೇರ್ ಮಾಡ್ತಿದ್ದೀರಾ ಅದ್ರ ರಿಸ್ಕ್ ಅಡ್ಜಸ್ಟೆಡ್ ರೇಟ್ ಯೂಸ್ ಮಾಡಬೇಕು. ಇಫ್ ದಟ್ ಇಸ್ ನಾಟ್ ಅವೈಲಬಲ್, you can use WACC. If WACC is not available, either incremental borrowing rate or any other market rates you are supposed to use. Okay. Now let's understand everything here. Now that we have learnt all the things, let's understand the accounting. Okay. Now, say carrying amount of an asset is 5 lakhs. Value in use is 6 lakhs. And fair value less cost of disposal is 3,50,000. What will you do? Now you have to do the impairment testing. How to do the impairment testing? First step, find out the recoverable amount. How to find out recoverable amount? It's value in use or fair value less cost of disposal, whichever is higher. Which is higher here? 6 lakhs is higher. Now recoverable amount is 6 lakhs. Now compare it with carrying amount. Okay. Recoverable amount is greater than carrying amount. Is the asset impaired? No, don't do anything. Now say suppose this 5 lakhs, instead of 5 lakhs it was 7 lakhs. Now is the asset impaired? Yes. Now I have to book impairment loss. What is the entry I will pass to book the impairment loss? Loss is a is like an expense increasing debit. So impairment loss account debit to your asset is decreasing, alva. So asset account credit. I should decrease it by how much? This impairment loss will go where? Ultimately the loss will go to P&L. Correct? This is if you are following. Say the asset is PPE, and for PPE you are following cost model. If you now one more simple question you can answer. Where did it go? Oh, here. Some more points they have given. Let's see here. Any impairment loss of a revalued asset shall be treated as revaluation decrease as per the other standard. And the impairment loss and ultimately what is happening? The value of asset is decreasing. No. What we learned, no, for revaluation movements in AS10, same thing you are supposed to apply in AS28. Basically what we understood here. If it is cost model, credit asset. If it is revaluation model, credit revaluation reserve. Okay. Now, what are the other things? When the amount estimated for an impairment loss is greater than the carrying amount of the asset to which it relates, an entity shall recognize a liability if required. Very important point. This we will understand. Next point. After the recognition of an impairment loss, the depreciation charge, this also we have discussed yesterday, the last thing we discussed now. Now you did impairment. Earlier the value of the asset was 8. After impairment loss, the value of the asset became, carrying amount became 6. Since the value of the asset changed, then what will you do? To find out next year's depreciation, take the revised carrying amount minus scrap value divided by remaining useful life. That we already know. Fourth one you leave. Second one, when the amount estimated for an impairment loss is greater than carrying amount. Very important point. Now certain questions will also come based on this. Okay, for example, you have an asset which right now has a carrying amount of 6 lakh rupees. Okay, now some legal changes in legal environment happened. So changes in legal environment is an indicator for impairment. 100% yes. What changes happened in legal environment? They told this whatever machine is there, no, you cannot use it at all. In machine, you cannot use it at all. Immediately you have to destroy it, not even just keep it, you have to destroy it. Now you have to destroy this machine, I have to incur how much? 50,000 rupees. Now do the impairment testing. Did you understand the law change now? From today I am not supposed to use this, and even if I have the machine, I have to destroy it. To destroy I am incurring 50,000. Now let's do the impairment testing. Tell me what is the fair value less cost of disposal? Huh? Normally what is the fair value of this? It becomes negative. See, fair value has become 0. Why 0? Because no one wants to purchase this asset now. Because government has told don't use it. So fair value has become 0. What is cost of disposal? Minus 50,000. So it has become negative. Correct? Huh? Then what is your value in use? Value in use is also 0, no? Because can you use the asset? No, government told you cannot use the asset also and you have to immediately destroy. Value in use has also become 0. Now what is your recoverable amount? Whichever is higher. So 0. So in this case if you see, the entire 6 lakhs is gone first of all. And further 2 lakhs you have to put from, 2 lakh antine, 50,000 you have to put from your end only to destroy the asset. Now don't you think the impairment loss exceeded the carrying amount of the asset itself? In that case what we are supposed to do is what they are asking. They are telling, to the extent the amount is gone, decrease the asset, any excess is there, no, create a liability, anta they are telling. That means in this situation the entry you will pass is impairment loss. How much is your impairment loss? 6 lakh 50,000. 6 lakh entirely gone. and 50,000 is for that destroying of the asset. 6,50,000. But how much is your asset? Asset carrying amount is only 6 lakhs. So asset can be reduced to the extent of 6 lakhs. Then what will you do for extra 50,000? That extra 50,000 is what? It's a liability, no? Because cost of destroying, government has told to destroy it. That means for us it is a legal obligation. Legal obligation and we can book liability to provision for destroying the asset. How much? 50,000. Did you understand, all of you? So this is the situation where the impairment loss exceeded the carrying amount. How much was the impairment loss? 6,50,000. Carrying amount was 6 lakhs. Excess, what did you do? You created a liability. All of you clear? Understood the situation? We have a question which is asked in exams also. It is there in our study material also, this question. Okay. Now let's understand the concept of CGU. Okay, what is CGU? CGU is a cash generating unit. Okay, cash generating unit means what? First let's understand that. It's the smallest identifiable group of assets that generates independent cash flows. It's the smallest identifiable group of assets that generates independent cash flows. First you have to understand one point. Till now we have learned how to do the impairment, no? For a particular asset we were doing. We were doing impairment for every asset, no? Separately. Now there are some assets, okay, where you cannot do the impairment testing properly. For example, take this asset only, TV. Can I do impairment testing? How will you find out value in use for this? I know fair value, but can you find out value in use for this TV? Can you find out value in use for this bench? It's not possible, no? Can I find out value in use for this laptop? Not possible. So that time what to do? How to do impairment for these items? They are also PPE only, no? So that time, to solve this problem, we have cash generating unit. Now what I'll do is, for all these assets, now these assets, they are not generating cash flows themselves, okay, but they are helping for me to generate the cash flow in the classroom. Aita? Now what you have to do is, in your entity, you have to find out a CGU. CGU is what? That smallest group of assets which generates cash flows independently. Andre, this part of in your entity, this part, CGU part is there. Now, if you remove it and keep it outside, it should be able to generate cash flows on its own. Now, if I keep this TV outside, will it generate cash flow? No, it's not a CGU. Now, what I'll do? I'll take this TV, classroom, everything, building, everything. This part, this classroom, I will remove it, assume. I'll remove it and I'll keep it there. Will this classroom be able to generate cash flow? Yes. So in our academy, this classroom is our CGU. Did you understand? So I will group it as CGU and then I will do the impairment testing. So what is CGU? Smallest identifiable group of assets which is generating cash flows independently. Did you understand what is CGU? If you, one more example is if you take multiplex. Now you have food section also, you have theatre, cinema section also. If I remove that food section and I keep it outside, will it be able to generate cash flow? Yes. So that food section is what? CGU. And the theatre section is another CGU. All of you understood? Now what I'll do, since I cannot find out value in use for this particular asset, I will classify them as CGU and then do the impairment testing. Now when I say CGU, there will be group of assets, no? Now for example, I took a CGU. That is called CGU A. In CGU A, many assets will be there, no? Asset 1, asset 2, asset 3, asset 4. Say their carrying amount is like this, 6 lakhs, 4 lakhs, 2 lakhs, 1 lakh. ಈ ಥರ ಏನೋ ಇದೆ. Okay. Now what I have to do? Do impairment testing for the CGU as a whole. Okay. Now I'll take the total carrying amount. How much I'll get? 6, 4, 10. 10 plus 2, 12. It comes to 13 lakhs. I'll compare it with the recoverable amount of the entire CGU. I thought maybe that comes to 12 lakhs. This is recoverable amount of entire CGU. I thought, is it impaired? Is the CGU impaired? Yes, carrying amount is greater than recoverable amount. So we have 1 lakh loss. We know that 1 lakh loss will go to P&L, assuming everything is cost model. We'll keep it simple. Correct? Now this 1 lakh loss will go to P&L. To which asset should I allocate was the question. Because entry was what? Impairment loss account debit to asset. Asset normally. Loss I will debit 1 lakh. To which asset shall I give? CGU ಅನ್ನೋದು asset ಅಲ್ಲ. Hello. It is only our classification for the purpose of AS28 impairment ಅಷ್ಟೇ. In our books assets will be listed separately only. What to do? You have to divide this 1 lakh loss among all the 4 assets in the ratio of their carrying amounts. I thought this 1 lakh will be divided to all the 4 in which ratio? 6:4:2:1. That's the idea. Did you understand the matter? This is very simply I have told. We have goodwill and all here. I thought that is very important to understand. Just focus, okay? So we are under that CGU only, along with the concept of goodwill, okay? Now sometimes what would have happened? You have A is a company, has acquired one more company, B Limited. Now to acquire B Limited, you would have paid money more than their net assets, no? That money that you have paid more than net assets will be considered as what? Goodwill. Correct? So say suppose I purchased one company. That company, within that company has 3 CGUs. CGU A, CGU B and CGU C. Alva? I purchased a company and that company has 3 CGUs. Okay. Now to acquire this company I have also paid goodwill. If you have goodwill, whenever you have purchased another company, then what to do about that goodwill is the question. Alva? Because whenever you are doing impairment for CGU, why are you doing it? Because you feel that carrying amount of the assets is more than recoverable amount. But goodwill itself is an intangible item, no? So impairment hit ಆಗ್ತಿದೆ ಅಂದ್ರೆ, tell me, should it touch the carrying amount first or should it touch the goodwill first? If you are understanding the intention. Why are we doing impairment? Carrying amount is overvalued anta. So impairment loss ಏನಾದ್ರು ಇದ್ರೆ will hit it to carrying amount of the asset. But what they are telling is, hey, goodwill itself is one intangible item, no? Why are you hitting the carrying amount? First you hit the goodwill and finish it, no? Whenever there is impairment in CGU. Then you can touch the carrying amount. Did you understand the intent? So that's why whenever goodwill is there, we'll do it in a different way. Everyone focus. Now here, we acquired one company and that company has, as you can see, 3 CGUs, A, B and C. And their carrying amounts they have given. A CGU has many assets and the total carrying amount of those assets is 1,300, 1,200 and 800 respectively. To acquire this company which had all the 3 CGUs, how much goodwill I have given? 120. Aita? Now let's start the impairment process. Step 1, first what you have to do is, can I allocate this goodwill to each CGU? See, I have paid it at entity wise. Can I allocate it to each CGU? Is the first question. There are 2 possibilities. One, you can allocate it. Second possibility, you cannot allocate it. Our accounting differs. First, let's assume that this goodwill can be allocated to all the 3 CGUs. Okay. See, A, B, C, the net to fair values. If you see, here carrying amount they have given 1,300, 1,200 and 800. Can you see above? The carrying amount of ABC is 1,300, 1,200, 800. But whenever we have goodwill, no, we generally bifurcate the goodwill to all ABC in the ratio of not carrying amount of the assets, but in fair value of the assets. Because why tell me? Carrying amount is always at historical cost. Aita? Iga A has one land which is at 1 lakh rupees in the books, but actual value is 10 crores. Alva? While allocating the goodwill, should I take the fair value or the historical cost carrying amount? I should take fair value. So here also they have done the same thing. So what is the fair value of the assets? 1200, 800 and 400. Since they have given fair value in the question, can I allocate the goodwill? Yes. I will allocate it in this ratio, 12 is to 8 is to 4. How much was my goodwill? 120. Now take your calci. If 120 is the goodwill, divide it to all the 3 CGUs in the ratio of fair value of the asset. Andre 120 into 1200 by 2400. Next 60. Aita? Then for B it is 40. Alva? Andre it's 240, 120 into 800 by 2400, then 120 into 400 by 2400. Were you able to allocate the goodwill? You did the allocation, yes. A got 60, B got 40 and C got 20. Aita? Once you have done the allocation, now let's start the impairment test. Or here only we'll understand. Now, say suppose you have come to know that CGU A is impaired. How will we do the impairment test? Take the carrying amount, take the recoverable amount and do the comparison. Alva? Now, okay, while taking the carrying amount of CGU, how much will you take? 1300, No, 1300 plus take the allocation of goodwill. How much is allocation of goodwill? For A, it is 60. So 1300 plus 60. In carrying amount you will take 1360 and then compare it with recoverable amount. Say suppose recoverable amount is 1300. Let us see the example here. Here only. See, they have taken 1360 including allocation of goodwill. But recoverable amount is to this CGO is coming up to only 1350. That means we have an impairment loss of 10. All of you understood? Now the question is, sir, where will this 10 loss go? Of course, guys, all kind of impairment loss will go to P&L only. That we have no doubt. How will I hit it to asset? Because in CGU, we have goodwill allocated and we have all other assets that is coming under CGU. Now what to do for 10? What they have told, no, this 10, first you have to set it off with the goodwill component. Completely. Goodwill Kali Agovargo, you have to hit it with goodwill component. If you have impairment loss more than the goodwill allocated, then that excess will go to all other assets in the ratio of carrying amount. Did you understand, all of you? Say suppose you have goodwill of 120 and you are not able to allocate the goodwill. Okay, then what to do? Now you know that for CGUA you have to do the impairment test, but you are not able to allocate the goodwill because maybe you don't have fair value of the assets or something. Now in that case what you have to do? You have to do 2 tests. Whenever you are able to allocate the goodwill, no, you did only 1 test. What is this 1 test? Bottom sub test. But when you are not able to allocate the goodwill, you have to do 2 tests. Bottom sub test also and top down test also. Sir, here what you have to do? First you normally take CGUA. Were you able to allocate the goodwill? No, leave. First you take the CGUA. Do the impairment test directly. What is the carrying amount? If you have not done the allocation, carrying amount is 1300. There it was 1360 because you had allocated goodwill. Here we are unable to allocate the goodwill. Take normal carrying amount. How much? 1300. What is the recoverable amount? 1350. Is there any impairment loss? No. Because recoverable amount is only greater than carrying amount. So done. You did the bottom sub test. First you do this. Sir, if at all I had loss, then book that loss, no? In case you had got loss in this case, then book that loss, allocate it to carrying amount of the CGU. Once this test is done, then you go for overall test. Now you have to do overall test. Overall andre no. You are able to allocate the goodwill? No. Now do the impairment testing for the entire entity, not CGU wise. Entire entity which comprises all the 3 CGU. So let's do it. What is carrying amount of ABC? 1300, 1200, 800. Goodwill comes to 120. So your total carrying amount is 3420. Now take the recoverable amount of the total company. What is the recoverable amount of total company? It is coming to 3400. Is there any impairment? Yes, because your carrying amount is greater than your recoverable amount. By how much? 20. 20 impairment loss you book. That impairment loss will go to P&L, no doubt. How will you hit it to asset? Now, in this case, same logic. First you hit it to goodwill. This 20 will first go and hit the goodwill. Immediately your goodwill will become 100. Until that goodwill becomes 0, you will hit goodwill. Sir, now goodwill got over. Next, what to do? Allocate that impairment loss to A, B, C in the ratio of their carrying amounts. Aita? Now, within that A, sir, impairment loss, how will I spread it to asset? In the ratio of carrying amounts of the asset, I will allocate it. Did you understand? Same logic. So, whenever you are able to allocate the goodwill, you are doing only one test, that is bottoms up test. When you are not able to allocate goodwill, you are doing two. First, normally do bottoms up and then do top down test also. All of you got it? And first, whenever you are allocating this impairment loss, first you have to finish the goodwill. Once the goodwill is over, it can touch the other CGUs or within CGUs, other assets in the ratio of their carrying amount. Did you understand, all of you? Okay, that's about impairment of CGU with goodwill. There is something called as corporate assets. Corporate assets ಏನಂದ್ರೆ, these are the admin assets. Andre, these are the assets that you have in your business, but you cannot allocate it to any CGU. Okay, now I told that this classroom is a separate CGU. Aita? There is some assets here. For example, very simply I am telling, say suppose that sofa. Aita? This TV I have put it to this CGU. This fan I have put it to this CGU, our classroom, CA inter-classroom CGU. Where will I put that sofa? To which CGU shall I put? Now these are in the nature of corporate assets. Alva? I know that is also, this is also not directly generating cash flow. Papa sofa is also not generating the cash flow directly. But at least this TV I can allocate it to this CGU. But a sofa allocate madakagata? Illa. So they are called what? Corporate assets. They are your assets, but you are not able to allocate it to CGU. Then how will you do the impairment testing of those kind of assets? Corporate assets. The best example for corporate assets is, say suppose a company has some 5 branches in 5 different states and they have a head office in Bangalore. Head office will not do any sales, it is only admin office. Now this admin office is a building that is not used to generate cash flow, but it belongs to all the CGUs, no? Assuming each and every branch is a CGU. Can I allocate that main head office building to any of the one CGU? No, it belongs to everyone. So how will you do impairment for the corporate asset? Very, very simple. Okay. Just like how we did goodwill, no? In CGU, how we treated goodwill, no? Exactly like that only you have to treat that corporate asset. Just remove goodwill and put corporate asset wherever goodwill was there, no, in our entire discussion. Ali the goodwill tegiri corporate asset haki. Same, everything is same. There what was the question? Can I allocate the goodwill? Here the question is, can I allocate the corporate asset? If you can allocate, do the allocation first and then do your bottoms up test. Sir, I am not able to do the allocation. Then bottoms up test also you have to do top down test. Exactly how we did for goodwill, no? Remove goodwill and put the corporate asset. Ashte. In ella same, nothing, no other item is different. All of you clear? So one more small point it is better to understand. Okay. Very simple. Okay, but I feel that you should know. I cannot ignore it. Now, CGU there. Within CGU we have 5 assets. Now, CGU has an impairment loss of say 60. How will you allocate it to the asset? In the ratio of carrying amount. This much you understood, no? Now one small thing. In these 5 assets we had, no? There are 2 assets which are already at correct valuation and they are not impaired. They are already lower than their recoverable amount. For example, read this question. The carrying amount of an asset should not be reduced below the highest of net selling price, its value in use and 0. I thought what they are telling is, where is it? We already have a CGU and CGU has 5 assets. 6 lakh, maybe these are the carrying amounts. 5, 4, 3, 2. Okay, when you are doing the allocation of impairment loss, you should do it in such a way that once you allocate the loss, the value should be within the limits that is given here. Aita? What is the limits? Wait. The carrying amount of an asset should not be reduced below the highest of net selling price. Say for a particular asset, the net selling price is, where is plan? For a particular asset, net selling price is 6 lakhs. Value in use is, say 7 lakhs. That's 5 lakhs. Aita? Okay. Now I'm talking about this first asset. Okay. For this first asset, net selling price is 6 lakh and value in use is 5 lakhs. Which is higher? 6 lakhs. Correct na? Now say suppose to this CGU I have found a, I've done the impairment testing, I have an impairment loss. Now if I allocate that impairment loss to all the assets in the CGU in this ratio of 6:5:4:3, that's what we have learned. No, you cannot do that allocation for this first asset. Why? If you do allocation of impairment loss, what will happen? Now the value of this first asset will reduce 6 lakhs. They are telling after impairment in CGU, you did the impairment loss allocation, no? In which ratio? In carrying amount ratio. You do it, it's okay. But once you do it, that individual asset valuation should not go below higher of NSP or value in use. Did you understand? Now I'll take the first asset. What is higher of NSP and value in use? 6 lakhs. That means they are telling after allocation of impairment loss of CGU to this individual asset, that individual asset should not go below 6 lakhs. Andre, tell me, can I allocate the impairment loss to the first asset? No, because what is the NSP or value in use, whichever is higher? 6 lakhs. They are telling after impairment loss, it cannot go below 6 lakhs. Right now the carrying amount is already at 6 lakhs. So can I allocate the impairment loss of CGU to this first asset? No, I cannot touch first asset. So then what to do? Just do it among, just share it among the remaining 4 assets in their ratio, which is 5:4:3:2. Artha aita matter? CGU impair aito. A impairment loss na asset allocate ಮಾಡ್ತಿರಲ್ಲ. After allocation, that individual asset should not go below the highest of NSP and VIU. Did you understand? Huh? Paka. Enough. Then comes reversing of impairment loss. Okay, what is reversal of impairment loss? Earlier there was an indication you booked impairment loss. Reversal andre ulta. The recoverable amount is now. That time recoverable amount was lesser than carrying amount. Now ulta situation is happening. Recoverable amount is more than carrying amount. Then whatever impairment loss you had booked earlier, you have to reverse it now, basically. So when will you do reversal of impairment loss? Very simple. Just like impairment testing. When will you do impairment testing? Whenever there is a indicator. Reversal of impairment loss also you have to do whenever there is a indication. Sir, which indication, sir? We did know that internal, external. Same indicators, ulta. For example, there in external indicator we saw that if the market interest rates rise, we are supposed to do impairment testing anta. Now for reversal of impairment loss, ulta criteria. If the market interest rate drops, then you have to do a reversal of impairment loss. Did you understand, all of you? Whenever there is an indicator, same internal, external indicators only, or everything ulta. If that happens, then you have to do what? Reversal of impairment. Now when you do reversal of impairment, what should be the journal entry? Very simply. When you do reversal of impairment, asset is increasing. So asset account debit to what? It is credited because it is getting reversed. Understood? Ulta entry. Okay, you can reverse. Now while doing this reverse, we just reversed. First you reduce the asset by booking impairment loss. Now we are increasing the asset by reversing. But while doing that reverse, we have certain things to be kept in mind. Kidhar. So let's see the point. Impairment loss is reversed. I think the first point that you should remember in reversal, okay? On reversal, the increased carrying amount of an asset due to reversal of impairment loss shall not exceed the carrying had no impairment loss been recognized. Very important point. Now we are doing impairment of loss. Earlier you had booked impairment loss of 3. Reversal aguvaga, will you just increase it by 3? My question. Once impairment loss had happened, you booked the loss of 3, reduce the asset by 3 lakhs. Will you increase it by 3 now? No. They are telling, okay, you can increase it by 3, but before that you have to do one test. The test is, if at all you had never done impairment, if at all you had never done impairment, today what would have been the carrying amount, alva? Your reversal of impairment cannot exceed that. Did you understand the point? We'll understand. Say suppose you had one carrying amount. You had an asset, it had a carrying amount of 6 lakhs. You are doing depreciation, normally you are doing depreciation. Assume there was no concept of impairment. You are normally giving depreciation, say 20,000, 20,000. For 2 years you have given. What is the carrying amount now? 5 lakh? 5 lakh 60. This is without the concept of impairment at all. Right now the carrying amount is 560. Somewhere at this year you had already done the impairment. Impairment madidira, you have booked the loss of 3 lakhs. Then at the end of 3rd year, what is happening? The reversal of impairment loss. Now earlier you had booked a loss of 3. Now you are reversing it. After reversing the impairment loss, say suppose the carrying amount is becoming 6 lakhs. Is this possible? They are telling no. Okay, whenever you want to book impairment loss, whenever you want to reverse, you reverse it also. I am allowing you. But when you reverse, when you reverse the impairment loss, now the carrying amount will increase, alva? It should not be more than this 5 lakh 60,000. Understood? 560 is what number? Number as if you had never done the impairment. So reverse madi. Adra maduvaga it should not exceed this amount which would have been there if you had never done the impairment. Did you understand the point? So on reversal of impairment loss, where will that go? Of course it will go to P&L, no doubt about it. But if you are doing it under revaluation model, then where will it go? It will go to revaluation reserve. Okay. Next, a reversal of an impairment loss of a revalued asset is credited directly to revaluation reserve. This we already know, correct? Okay. So done, all of you. So yeah. We were discussing about reversal of CGU. Now let's discuss reversal of impairment loss for CGU. Okay. What will you do there? Earlier when impairment loss had happened, first you gave it to goodwill. And then you allocated the impairment loss to assets, alva. When reversal is happening, what you are supposed to do? Same ulta. Whenever you are doing reversal of impairment loss, you will allocate it only to assets system. Again will you come back to goodwill? No guys, while doing reversal of impairment loss, goodwill can go. While booking impairment loss, goodwill can go. But while doing the reversal again, goodwill cannot come back. And whatever reversal of impairment loss is there, that can be allocated only to the carrying amounts. Did you understand? Hogid goodwill matte vapas barakagala, because it leads to what? Generation of self-generated goodwill. So reversal of impairment loss, while going you have allocated to goodwill, let it go. While coming back, it's only for carrying amount of the assets, goodwill cannot come back. Did you understand? Only under one certain exception, there is one exception where goodwill can come back during the reversal of impairment loss. Only one exception. What is that exception? See here. Goodwill should not be reversed in a subsequent period unless, it should not, you cannot bring back the goodwill during the reversal unless The impairment loss was caused by a specific external event of an exceptional nature that is not expected to reoccur, and the subsequent external events have occurred that reverse the effect of that event. No, whenever we are doing reversal of impairment, no, there is that indicator we are talking about. That indicator ideyala, it should be a proper indicator. Andre earlier, whenever impairment loss had happened, some change in environment, something happened, some indication came, we did the impairment loss. Now that situation which led to impairment loss that time, maybe some change in loss, change in technology had happened, we had done impairment loss. Now such situation should have actually changed. Andre avagino technological change bantu, that's why I have done the impairment loss alva. Now the technological change which affected us should have gone. Athwa some law had come earlier that time which had restricted us. Now that law should go away. There should be some change in the external event. Then they are telling, okay, bring back the goodwill also. All of you? Sir, change in estimator, cash flow estimation was wrong, that was wrong, this was wrong, we want to bring back the goodwill. Andre? Not possible. The real event which that day caused us to book the impairment loss, that actual event has reversed now. Paristhiti change agide. Avattidid event ittu impairment loss we book. Today that event itself has changed. Now you can bring back the goodwill. For small estimator, I will bring back the goodwill, not possible. Clear? So that's about impairment. Okay. Now one more small thing, what went wrong, in our discussion. I think I've put it ulta, wait a second. Where is it? I don't know whether I've told it or not, but I will reiterate it once more. Say suppose you are following revaluation model. Impairment loss happens, where will you hit it? Say suppose you are under revaluation model, impairment loss happens. What is the entry will pass? That entry, I've told it then. No, impairment loss. We have to hit revaluation reserve. So what you have to do is, asset is decreasing, no? So to asset account, correct. Debit, not impairment loss, hit it to revaluation reserve. It should be revaluation reserve account, debit to asset account. Okay, this one thing. And the reversal of impairment adre? Asset account debit to revaluation reserve. Okay. Now you are booking impairment loss. This you already know. Now you are booking impairment loss. Here if you see revaluation reserve account is debited. If you have balance, you can debit revaluation reserve. If you don't have, you cannot. That time P&L will come. Are you clear? Now you can link. If you don't have revaluation reserve balance, then you can debit impairment loss. It will ultimately go to P&L. But if you have revaluation reserve balance, debit revaluation reserve balance. All of you clear? Similarly, while doing reversal of impairment, what you are doing? Directly crediting the revaluation reserve. Alva? Say suppose earlier you had dipped the P&L because you did not have revaluation reserve. When the gain is happening, what did we learn in AS10? First reverse that in P&L and then touch the revaluation reserve. Do you remember in AS10? Downward revaluation agoga, first you would have touched P&L. Again if upward revaluation happens, what will you do? First credit to P&L and then goes for revaluation reserve. Similarly here, if you have such dip in P&L before, directly can you credit revaluation reserve? No. First reverse that dip and the credit P&L and then credit revaluation reserve. This one thing, please note down. Andre, got it alva? All of you? This is the entry. Somewhere I remember I told impairment loss to, that is not wrong, nonsense. I told it somewhere, I remember. Where is it? Ele? Cost model. Nonsense. This is nonsense. Sorry. Impairment loss will not come. It's RR to asset. Okay. Clear? So with that, we have done with AS28. Okay, we'll solve some questions from AS28. Assumingly, it should be there. Very good, it's not there. Here also it's not there. In May 2026 also we have an AS28 question, but that is very, simple. You can watch our video. You watched it's not yet come, no? But there is one, that magazine title anta one question ide, which is there in our study material also. Whether that magazine title can be considered as a CGU anta. It is yes. You can go through that question, simple. Okay. Okay. So let's go to the next standard. We don't have any interesting questions from AS28. Okay. So next, which standard? Let's go to so we have to do, let's go to AS12. Okay. What is AS12? AS12 is our government grants. Aita? Simple standard. Okay. So let's start. What is a government grant? First of all, we have to start from there. Government grant, as they have told here, is a financial aid or support provided by the government to enterprises like us. It is help given by government. It can be in cash or it can be in kind. They can directly give us cash, or they can directly give us not cash, but maybe if I want some asset, directly they'll give us the asset itself. Now that what happened? Assistance of the government in form of kind. It can be cash or in kind. To an enterprise's past or future compliance. See, very rarely they'll give free grants. Generally when government gives grants, no, they will have some conditions. Conditions irate. You are supposed to do this, then only you will be eligible for grant. Or I will give you grant, but within 3 years you are supposed to do these things, then only you are eligible. If you don't do these things, then you have to refund the grant anta. So generally there will be conditions that we have to comply. It can be past or future. And the first they'll ask us to comply and then they'll give the grant, or they'll give us the grant and then they'll ask us to comply. So it can be anything, but what you have to understand, condition is there. So that means they'll not give free grant only. They will give, but it is very rare. Okay. Okay. They exclude those forms of government assistance which cannot reasonably have a value placed upon them, and transactions with government which cannot be distinguished from normal trading transactions. If say suppose I am dealing with the government, okay, and it is like a normal transaction only, andre it is not the benefit given by government, okay, it's normal. Okay, just to give you an example, I am normally supplying, or I am, say suppose I am purchasing something from a government department. It's a normal transaction. For others also is selling at same price. For me also is selling at same price. Is that a benefit? Now say suppose in that transaction he has given me cash discount. Is that a government grant? No, he is giving cash discount to other customers also. Like that only he has given it to me. It's a normal trading transaction. Now just because it is given by a government department, you cannot consider it as a government grant. They Then if there is any benefits that is given by the government for everyone in common, okay, that cannot be considered as government grant. For example, there is one website which is issued by government. You can also use, I can also use freely. Some AI website has come. Both, all of us can use it freely. Now for me, it's an asset only, literally, because I'm able to get many benefits from that software or whatever, website. Is that a government grant to me? No. It is given for everyone. For me, it is not a government grant. It should be given specifically. Now there is that bus stand. Exactly opposite to our academy. Now it is available for everyone. No, it is what government has done normally. It is not the benefit only for me. I cannot treat it as a government grant. Did you understand? Okay. Now, how to treat this government grant whenever you receive? Okay, we have two approach: capital approach and income approach. Okay, when you go to Ind AS, no, these two bifurcation is not there. Only one is there. However, in our AS only we have capital approach also. Capital approach enandre, in capital approach, government will give you grant. Okay, it is not asking you any conditions to comply. No conditions. It is giving you grant. See here. Grants which have the characteristics similar to those of promoter's contribution. It will put the fund and it will go like a owner. Will owner ask anything? Until putting the money he will ask. After that he cannot ask anything. Like that only. Government has given no other conditions. It is for you to run the business. That is one indicator. And second, whenever the government is giving such grant, no, the grant is generally calculated with respect to the total investment. And maybe I am starting a new factory. The capital investment required for the new factory is 100 crores. Government has told that I will give you 20% of the capital investment. What is my capital investment? 100. 20% of that is coming to 20 crores. Whenever if it is linked to the total investment, no, the grant amount, then it is generally called as promoter's grant. And here government has only given, but in capacity of owner. Generally. And you cannot ask no if you give money. Owners are like that only. Until investment they can ask. Once they invest, money is gone. So government also has given money like that only. No conditions attached. And it is given and it is given that money as a calculation on total investment. So it is like a promoter's contribution and the owner's contribution. Now whenever you receive this promoter's contribution grant, where will you put it? Immediately you have to put it to capital reserve. What is the journal entry you will pass if you receive a promoter's contribution grant? Bank account debit to capital reserve account. Why? Because this grant is in the nature of capital. So I don't want to recognize it as income and all. Okay. In other, the income approach, what will happen? Your grant will be treated as an income. But under capital approach, will I treat this grant as an income? No. That is given by government as a owner. So that will directly be transferred to capital reserve. All of you clear? Promoter's contribution. Government will not ask anything and it is given with respect to what? As a percentage calculation of the total investment. Income approach, whatever grant I am getting, no, of course it is an income to me. In this approach I will try to treat it as an income. See, grant is taken to income over one or more periods depending on the condition. Now say suppose government will come, government will say, hey Sipa, I will give you 10 lakh rupees grant provided you open a hospital. You are already opening an hospital, alva? For 3 years you employ nurses from government college. I will give you 10 lakh rupees grant. Now I have to comply with this condition for how many years? 3 years. Now whatever grant I have received, no, I will recognize it as income over 3 years. The period which we are talking about is the condition period. Government for 3 years you have to employ nurses from government college. You have to spread this income over 3 years. Did you understand? Clear? See, AS 12 adopts income approach for most of the grants, which is true, correct. Now to recognize any kind of government grants, whatever above, there are some conditions to be satisfied. Very simple. First one, government grant is not recognized until there is reasonable assurance that enterprise will comply with the conditions. Are you sure that you will comply with the conditions? Yes or no? Now you know the condition. For 3 years you have to employ nurses from government college. Are you sure that you can comply with this condition? If the answer is yes, then only you can recognize grant. If the answer is no, If you are now only not sure that whether you will comply with conditions or not, then can you recognize the grant? No. Second condition, there must be reasonable assurance that the grant will be received. Do you think government will give a? Because you have a doubt. The condition period is for 3 years. For 2 years, this government will be there. Third year, new government will come. Now you have a doubt. I will do all this. What if the new government comes and it will not give me the grant? So you are not completely sure. You cannot recognize the grant. Okay. Third, receipt of grant is not of itself conclusive evidence that the conditions will be fulfilled. Now I told you what is the government grant? Conditions can be complied in past or in future. Now say suppose we are talking about future. The government told, I will give you grant now. For 3 years you have to comply. If you don't comply, you have to refund anta. Just because you have received the grant, will you recognize it as a grant? No. Still you have to see these conditions. What are these conditions? Can I comply with the conditions? And will the government give me money? All these conditions you have to see. Just because you received the grant doesn't mean you can comply the condition. Illa. You understood my point, no? In general cases, you comply with the conditions first and then receive the grant. Aita? Ulta agoytu ankoli. Grant first receive ಮಾಡ್ತಿದ್ದೀರಾ, then you have to comply with the conditions. Will you recognize it as a grant just because you received it? No. Still you have to see the conditions. Will the government give or can the conditions be complied? All that you have to see. Of course, here money government has already given. Assume government has given part grant. Something like that. Just because you have received the government grant doesn't mean you have complied with the conditions. Clear? Now, let's come to the accounting part. Okay. First, let's understand about non-monetary government grants. Andre, government has given you grant, but not in cash. They have given you grant in kind. Kind and directly that asset only they have given it to you for free of cost. How to record it? Say suppose they have given you land or other resources and they have given it free of cost. What will you do? Record it at nominal value. Nominal value andre? Government has given you land or some asset free. What will you do? Record it at nominal. Andre some 1 rupee for 10 rupee you record that asset. Sir, why sir? Because you cannot record any asset at 0. If you don't record, then that will not show in your balance sheet. Not correct, alva? That's why for the sake of it I will record at 1 rupee and I will ensure that it is coming in our financial statements. Clear? Other non-monetary assets which are given at concessional rate, record that asset at acquisition cost. Maybe there was one land enta enkoli. The land value is 10 lakh rupees, but government gave it to you for 5 lakhs. Then how will you record this land? You record it at concessional rate. And then record how much did you pay? 5 lakh rupees. What is the entry you will pass? Land account debit to bank account 5 lakhs, 5 lakhs. If you have got it for free, record it at 1 rupee. All of you clear? Any doubts? Okay. Now, if you have received a depreciable asset, then what to do? Depreciable andre gotala, PPE, etc., which can be depreciated. Okay. Now, what is happening is, here also government is helping you with respect to asset only. But earlier what they did, they only gave you the asset freely and they only handed it over to you. Now the case changes. They give you the money, you will have to buy. Now government gave you 5 lakh rupees. Government gave you 5 lakh rupees for purchase of asset. Sir, how much is the actual asset? Actual asset is 10 lakh rupees. How much did government give you in money? 5 lakh. Why did they give you? To do this purchase of asset. Now what will you do? You have two options. One option is, whatever you have received from government with respect to this asset, now directly reduce it from the cost of the asset. Simple. Alva? When you purchased, what is the entry you would have passed? Some PPE account to bank. How much you had paid? 10 lakhs, 10 lakhs. Now when you receive the grant, directly reduce it from the PPE. Aita? Now you received from the government, no, how much? 5 lakhs. So bank is increasing 5 lakhs to what? reduce the asset. Under bank account debit to PPE 5 lakhs. So what did we do here? Whatever grant you received, you deducted it from the cost of the asset. Now what is the value of your asset? You paid 10, but whatever grant you received, you have credited to asset account only. Now the value of the asset has become 5 lakhs. Now you will calculate depreciation on which amount? 10 na 5 ah? You will calculate it on 5 only. All of you understood first method. Second method to do the same accounting for the similar situation is, whenever I purchase asset, I will pass that entry. Entry is PPE to bank. 10 lakhs, 10 lakhs. Later I got 5 lakhs from the government. No, that I will now not reduce it from the cost of the asset. I will transfer it to a separate account called as DGG account. Okay, bank account debit to DGG account. What is DGG? Deferred government grant account. So this 5 lakhs I will put it to DGG account. Simple, separate. Sir, then what will you do? Next what I will do is, this PPE I will normally charge depreciation. Entry is depreciation to PPE. I thought say depreciation is 1 lakh normal. And this DGG, this is not an income natured account. DGG is right now a liability natured account. From that natured account, every year I will transfer it to income. What will I do? DGG account I will debit. I will transfer to P&L. Sir, how much you will transfer? Entire 5 lakhs? No. I will transfer this 5 lakhs to income in the ratio of, in this case, in the ratio of depreciation of the asset. Okay. Generally what you should do now, basically what we are trying to apply here is matching concept. Your income should match with your expense. In this case, what is the expense? The depreciation. No? So bring the income from DG to P&L every year in the ratio of depreciation. Now say suppose depreciation is 5 years. If depreciation is 5 years, useful life is 5 years, then depreciation will be how much? 2 lakhs. So every year it will be 2 lakh. The ratio of depreciation for 5 years is 1:1:1:1. So this 5 lakh also you divide it for 5 years in 1:1:1 ratio. That means how much it will come? So 1 lakh you have to bring to income every year to P&L. So expense 2 lakhs, income 1 lakh, net expense is 1 lakh. Correct? See, same thing is happening here also. Here what is the value of PPE? 5 lakhs divided by 5 years. Depreciation comes to 1 lakh. How much is going to expense? 1 lakh only. Here expense 2, income 1. Net expense is 1 lakh. Both are same. All of you understood? Okay. All these are called as capital grants. Under capital grants, I am using this grant for capital assets. No. Sometimes you will receive revenue grants. What is revenue grants? Government will give you grant. Not for purchasing asset, etc. They will give you grant and they will ask you, for 3 years you are supposed to employ nurses from government college. Now here government is giving me grant of 10 lakhs to purchase some asset. No. In that case, what will I do about that 10 lakhs? Now it is not for any capital asset. This all conditions is for asset. Now government gave you 10 lakhs. So what you have to do is, the moment you receive, entry is bank account debit to DGG account only. Bank account debit to DGG, 10 lakhs, 10 lakhs. Now what I have to do? I have to employ them for 3 years. Alva? That means from DGG, I have to bring the grant to P&L over 3 years. So in which ratio? SLM? No. In the ratio of expenses that you are incurring to comply with the conditions. Maybe to employ nurses from government college only, the expenses that you are incurring is maybe 6 lakhs first year, 12 lakhs second year, and maybe 18 lakhs in third year. Why are you incurring this expense? To employ nurses of government college. This is the expense that you have incurred every year. 1, 2, 3. And you have got 10 lakhs which you have kept it in DGG. Bank account debit to DGG. 10 lakhs, 10 lakhs. Now how will you bring it to income? In which ratio? In this ratio. 6:12:18. 1:2:3. Now divide 10 lakh into 1/6 and rest barute. First year how much will I bring to income? DGG to P&L account. How much it will come? 1,66,667. Understood? Second year, how much I will bring? Same entry I will pass. Second year, how much I will bring? 3,33,333. Aita. Third year, 5 lakhs. This is how I will bring the government grant from DGG account, because DGG account is what? Liability natured. So I will bring it to income every year in this ratio. 1,667, 3,333 and 5 lakhs. Did you understand? 3 years I will pass this entry only. Got it? Okay. Now, refund of government grant. Maybe you did not comply with the conditions, you have to refund. Okay. How to do it? Let's first discuss about revenue grants. And just now we discussed our revenue grants. Okay. When you had received, the entry you had passed was bank account debit to DGG. Now, maybe how much you had received? 10 lakhs. Now you are refunding the 10 lakhs because you did not comply. So of course 10 lakhs will go from bank. So bank should be credited to bank account 10 lakhs. Debit what? Very simple. You will tell me DGG. Alva? Because when you received, you had put it to DGG. While reversing also you have to put it to DGG. But what has happened? Over the time, you have transferred the money from DGD to P&L, no? So will DGG 10 lakh balance irata? Maybe not. If you have 10 lakh balance, then okay. Put 10 lakhs. I have no problem. But if you have 5 lakh balance, then what will you do? Then put 5 lakh. Remaining 5 lakh will go to P&L account. All of you understood? If you have 10 lakh balance in DGG, use it. But if you don't have, the remaining will go to P&L. All of you clear? Okay. Done, sir. Same thing we will do. For capital grants also, Andrea, say suppose your government has given you money to buy some asset. Aita. There also we had two possibilities now. One possibility, reduce it from cost of the asset. One more was, take it to DGG. If you have taken it to DGG and if you are repaying it, same logic. If you have DGG, use it. If you don't have DGG, put it to P&L. Sir, the thing is, whenever I received the grant, I had reduced it from the cost of the asset, sir. What should I do? Simple. Then in that case, what is the entry? How much you had received? 5 lakh we had received, alva. So now 5 lakh should go. So to bank, 5 lakhs. Earlier you had credited asset. Now you will debit the asset. 5 lakhs. That's all. All of you understood? If you have whatever grant you have received, if you have put it to DGG, then while doing the refund also debit DGG to the extent DGG is available. Extra will go to P&L. Whenever you have received the grant, if you have reduced it from the cost of the asset, then what you will do? While refunding, debit the cost of the asset. And the debit asset, credit bank. DGG hogidre, DGG account debit to bank if you have DGG, or else DGG P&L to bank. All of you understood? Done? Clear? Let us see. If we don't have, yes, we have. So come on. This is RTP May 2026 question. Nonsense. Okay, simple question only, not great. Era Limited installed plant and machinery costing 100 lakhs. So it's an asset. On 1st April 23, and they received a government grant of 40% towards its cost on the same day. So out of 100 lakhs, how much did government give? 40%, and the government has given 40 lakhs. Aita? The grant was credited to plant and machinery account. Which accounting policy they used? Did they reduce it from cost of the asset, or did they put it to DGG account? They have reduced it from the cost of the asset. Good. The life of the plant and machinery is 5 years and residual value is 10. The company charges depreciation on SLM. After 1 year, the company had to refund the grant to the extent of 25. And they had received how much? 40 lakhs. Out of that, 25 they have to give. due to non-compliance with certain conditions. You are required to pass necessary journal entries in the books of ERA Limited for the first 2 years for the above transaction. So Aram se will discuss. First I purchased the plant and machinery. So plant and machinery account to bank, how much? 100. Later government gave me 40%, andre 40 lakhs. So bank account debit 40 lakhs to PPE. I'll reduce it from the asset, plant and machinery account. Aita? Then what I'll do? Normally I will give depreciation. On what amount? Will I consider 100 for depreciation or 60? 60. Take 60. What is the depreciation for first year? 60 minus residual value 10 divided by useful life is 5. How much you'll get? 50 by 5. And the per year depreciation is 10. So depreciation account debit to plant and machinery 10. And that depreciation is an expense that will go where? So P&L account debit to depreciation. Clear? Next what happened? Now on 1/4/2024 next year I am supposed to refund the grant. How much? 25. So money will go 25 to bank account 25. What to debit? DGG. Hey no, whenever you received you have reduced it from cost of asset. No, debit the asset account. Plant and machinery account debit to bank 25. 25. Are we clear? Now my question. Now for next year after refund calculate depreciation and tell me. I have told you the guidance in the last class, yesterday class last only. Whenever the value changes because of whatever, how will we calculate the next year depreciation? Takes the revised carrying amount minus revised residual value by what? Remaining revised useful life. Aita? Revise agidra. Revise agidra andre very important is remaining useful life. Now tell me, what is the revised carrying amount? First it was 60. Then we gave depreciation of 10. It has become 50. Then now when we refunded, we again increased it by 25. Now the valuation has become 75. You have to use 75. Minus, how much is the residual value? It is not changed. It is same only. So minus 10 alva, 10. Divided by what is remaining useful life? 4. Aita, 1 year has already gone. So 65 by 4, how much? 25. So 16.25 should be the depreciation. Can you see? Again, next year depreciation is 16.25 and the depreciation is an expense will go to P&L. Clear all of you? Next question. Nice one. I don't know from which RTP, but it's good. Energy Limited has acquired a generator on 1/4/2023 for rupees 100 lakhs. On 2/4/2023, it applied to Indian Renewable Energy Development Authority for a subsidy. Subsidy is what? Government grant? Of course, no. It's assistance from government in cash. Okay. It applied to IREDA for a subsidy. The subsidy was granted in June 2024 after the accounts for 23-24 were finalized. The company has not accounted for the subsidy for the year ended 31/3/24. State, is this a prior period item? How should the subsidy be accounted in the accounting year 24-25? Actually, it is a question which belongs to AS 4 actually. So you should know AS 4 provisions. But would you like to try? Or we'll come back once AS 4 is over? See, prior period item andre what? It should be an error or it should be an omission. That means it's a transaction which has happened that time, but you have either made an error or an omission. Now you have come to know about it. Now that becomes a prior period. What has happened here? I have got, on 2/4/23, I have applied for a subsidy. The subsidy was granted in June. So that means which is the financial year? 24-25. After the accounts for 23-24 were finalized, the company has not accounted for the subsidy for the year ended 31/3/24. My question is, first of all, you have applied for the subsidy in 23-24. You got the subsidy in 24-25. Tell me where the this thing should be recorded, grant. 24-25, 23-24. It should come in 24-25, no? They are telling just because they have applied in 23-24, should it be recorded in 23-24? Answer our question. What do you think? Wrong, no? Because for you to record grant, 3 conditions were there, no? ವಾಟ್ ಆರ್ ದ 3 ಕಂಡೀಷನ್ಸ್? ನೀವು ಕಂಪ್ಲೈ ಮಾಡ್ತೀರಾ ಅನ್ನೋದ್ರ ಬಗ್ಗೆ ಗ್ಯಾರಂಟಿ ಇರಬೇಕು. ಸೆಕೆಂಡ್, ಮನಿ ಯು ವಿಲ್ ರಿಸೀವ್ ಅನ್ನೋದ್ರ ಬಗ್ಗೆ ಗ್ಯಾರಂಟಿ ಇರಬೇಕು. ಓನ್ಲಿ ದೆನ್ ಯು ವಿಲ್ ರೆಕಾರ್ಡ್ ದ ಗೌರ್ಮೆಂಟ್ ಗ್ರಾಂಟ್. Forget, you have just applied. Just by applying, you are sure, do you have reasonable assurance that the grant will come? When you will have reasonable assurance? You have applied, they have approved. Adadmele you should have reasonable assurance that you will comply with the conditions also. Really, you have just applied. We don't have reasonable assurance that we will receive the grant. Henceforth, it cannot be recorded as a grant in year 23-24. It should be recorded in 24-25 only. Hence, it is not a prior period item. This is current year item only. Okay. How will you record it? How to account this subsidy? Tell me. Second question. It's two policies we have. No, either you can reduce it from the cost of the asset or transfer it to DGG and bring it to income in P&L every year in the ratio of depreciation. Clear? Same thing you have to write. Adanella baradre ishtu content agutte. RTP Jan 2026. What is this deadly question? Full dollars and all is there. Okay. Medieval Hospitals, a reputed healthcare company operating, had acquired 40 units of Doppler scan machines from Oliver Inc. USA at a cost of US dollars 1,65,100. So one machine is how much? $1,65,100 at the beginning of 22-23. The prevailing exchange rate at that time was 50 rupees per dollar. The acquisition was partly financed through a government grant amounting to 5 crores, which was sanctioned specifically for the purchase of these machines. The grant was sanctioned with a specific condition that in the event of change of management or ownership control of the company, the grant must be refunded to the government in April 2025. Understood? And if the control changes, you have to refund me the grant anta helidare. In April 25, 51% of the company shareholding was acquired by a overseas investor. That means, did the control change? Yes. Thereby resulting in change of management control. Consequently, the company became liable to refund the entire government grant. The expected useful life of Doppler scan machine is 5 years and the company follows a straight line method, depreciation at 20% per annum, SLM method, and the depreciation will be same every year. Additionally, Medieval Hospitals Limited incurred the following directly attributable costs. Bank charges is to $4,000. Sea freight 7,500 per unit. Why they have given this nonsense? This is from your AS 10 point of view. All these are what? Directly attributable expenses. No, you have to add it to the cost of the asset. You are further informed that the company has not maintained any capital reserve or deferred income account in respect of the government grant received. And they reduced it from the cost of the asset. You are required to advise the accounting treatment in the books of Medieval Hospitals Limited as a result of the return of the government grant in light of the relevant provisions. So, refund agidella, what should I do? Anta they are asking. What should they do? Correct? No. Since they have deducted it from the asset, when you are refunding, you have to add it back. The question is how much? So, that calculation we will see. What is the cost of the asset? One asset bandu 1,65,100. We have 40 such machines into, why have we done 50? Because it is in dollar alwa. So we have multiplied it into 50. So total comes to 3,302 lakhs. Aita? Then I am also adding the freight and other charges because as per AS 10 they are directly attributable. So how much was that? 4,000 for the entire transaction and 7,500 was for each and every unit. So that's why I have done 7,500 into 40 plus 4,000 entirely for import, but it is in dollars. So I have to multiply it by 50 to arrive at Indian rupees. So I added, that comes to 5 lakhs. Total 3,307. Later you received the grant. Grant received is reduced from the cost of the asset minus 500. It became 2,807. Then when did the grant become refundable? We received the grant somewhere during 22-23 beginning. And change in management happened on 1st April 25. Andre 23, 24, 25. For 3 years we would have given normal depreciation. At the end of 3 years refund is happening. So 3 years let's give depreciation. So 2807 into, how much is depreciation rate? 20%. Since it is a SLM, directly you can do into 3. 1648. Right now your carrying amount is 1123. Now whatever refund, whatever grant you want to refund, no, add it back. How much you have to refund? Entire 500. So add back 500. Now the value became 1623. All of you understood? Question is so big, answer is very small. Understood now? Whenever you have deducted from the cost, while you are refunding, just add it back. Simple. Okay? Clear? Any doubts in the question? Okay. Let's go to the next standard. All of you understood? Next, which standard? Breaker. Yeah? Segment reporting. Why is it small antana? Nonsense. We'll do AS 20 next. 13 is simple, no? We'll keep it for last. What is 13? Tell me. Investments. Okay, so let's go to next accounting standard, AS 20. Okay. So AS 20, which talks about earnings per share. Okay. So what is earnings per share? Generally in P&L that we draft, no? P&L. What will P&L tell us? It tells the profit that we have earned. So generally in the last part of the P&L statement, we generally disclose what? Earning per share. That means earning per share. Which shares are we talking about? Equity shares only. We'll take the, basically we'll take the, just to tell it in a summary way, we'll take the total profit earned divided by number of equity shares, and we'll understand per share how much the company has earned. That we will disclose in the end of the P&L, if you have observed. Okay. Now, there are two kinds of EPS, if you know. Correct? One is basic EPS and one more is? One is basic and one is diluted. Basic is very simple. What is the formula? It's net profit available to equity shareholders, basically. As you can see, net profits attributable to equity shareholders divided by weighted average number of equity shares. EAESH, earnings available to equity shareholders divided by weighted average number of equity shares. When I say earning available to equity shareholders, that means what you have to understand. Whatever profit you have got in P&L, no? The net profit. It is after subtracting all other expenses except the dividend. Which all dividends? Preference dividend and equity dividend, because you know dividend is an appropriation. It will not come as expense in P&L. It is directly reduced from reserves. We are talking about earning available to equity shareholders. So what we are supposed to do? Take whatever profit you have got in P&L and subtract preference dividend. Now whatever is remaining, no, that is earnings available to equity shareholders. Correct? It's PAT minus preference dividend divided by weighted average number of shares. All of you clear? About dividend, you have to understand one thing. In preference dividend, in preference shares also, we have two kinds, no? Cumulative preference shares and non-cumulative. What is cumulative preference shares? Even though if you are not giving preference dividend in a particular year, it will get accumulated to the next year. That means you have to give it in future. ಅದೇ ಪ್ರಿಫರೆನ್ಸ್ ನಾರ್ಮಲ್ ನಾನ್ ಕ್ಯುಮುಲೇಟಿವ್ ಅಂದರೆ ಇಟ್ ವಿಲ್ ನಾಟ್, that means this year if you don't pay, then next year need not pay. No, it does not accumulate. Next year you have to pay only next year dividend. So what guidance they have given for preference dividend is, if it is non-cumulative preference shares, no, then subtract from here the moment that preference dividend is declared. If it is declared by them, okay, you reduce that preference dividend. If it is not declared, then don't reduce. This rule is for what? It is for non-cumulative preference shares. But if it is cumulative preference shares, then even if it is not declared, you have to subtract. Tell me why? Logic. Because no matter I declare or not, it gets accumulated. So I have to subtract it. If it is cumulative preference share dividend, then even if it is not declared, subtract. If it is non-cumulative preference share dividend, then if it is declared, subtract. Not declared, don't subtract. Did you understand? Therefore, we arrive at basic EPS. One more thing is, now while dividing it by number of shares, they have told weighted average. Simply you can take number of shares, whatever number of shares outstanding in the end of the year. Can you take blindly that only? No. You have to take weighted average. Sir, why? What, all the shares is issued at the beginning of the current year only? No, some shares will be issued in the middle. Some shares will be issued in the end of the year, last day. Now tell me, throughout the year I had 5,000 shares. In the last day I have issued one more 5,000 shares. Now my total shares became 10,000. Now if I just blindly divide the profit by 10,000, will that be fair? No. Throughout the year the shares outstanding was 5,000 only. Till 364th day it was 5,000. In 365th day it has become 10,000. Now that capital with respect to 5,000 shares, new 5,000 shares, has not contributed to the profit at all. Then how can I divide it for EPS? No. So that's why what we have to do, time weighted number of shares we have to find out. Aita? Sir, how to find out? Let me just take a small example and I'll make you understand. 1st April is the beginning of the year. I already had 10,000 shares. Aita? On 30th June, I have issued further 5 lakh shares. On 30th September, I have further issued 2 lakh shares. Aita? How to find out weighted average now? Directly you will take 17 lakhs. No. There is 2 methods to do this, but we will follow cumulative method, which is very easy and is also better for the other concepts also. Now first what you have to do is, take the cumulative total. First cumulative total is 10 lakhs. 10 lakhs. Now you have to take period. The period that you will take is from the date of issue, which is 1/4, till the date of next change. When is next change happening? 30th 6. ಎಷ್ಟು months ಆಯಿತು? 4, 5, 6. Take 3 months. 10 lakh into 3 by 12. How much you'll get? We are doing cumulative method. How much? 2 point. Next again you take the next cumulative. What is next cumulative? 10 plus 3. The next cumulative is? The next cumulative is 15 lakhs. Aita? Now 15 lakhs, you have to take it until the next change. From 30th 6 till the next change. When is the next change? 9. And the 7, 8, 9. 3 months. 3 lakh. Okay. Take the next cumulative. What is next cumulative? 15 plus 2, 17 lakhs. Now that you have reached the end of the year, from 39, you will take till when next change happens? Don't wait till next change. Take the end of the year. What is the end of the year? 31st March. So 30th September in the 31st March gets to 10, 11, 12, 1, 2, 3, 6 months. So into 8 lakh. Now add this. 2 lakh 50 plus 3 lakh 75 plus 8 lakh 50. It's 14 lakh. So this is the weighted average number of shares. All of you understood the cumulative method. There is one more way to do this also. You want to know it? Very simple. This is cumulative. We will be using this only everywhere. One more method to get the same number is, we will start with 10 lakhs only. First issue 10 lakhs. Into, now while taking the months, you have to take it till the end of the year. So right now it is issued on, it's already there on 1st April. So till end of the year under 12 months. 12 by 12. So it comes to 10 lakhs. Next remaining, now no need to take cumulative. Next you have issued on 30th 6. How many shares you have issued? Aita. Take it till the end. It is issued on 30th June. So till the end, how many months is there? From 30th June till 31st March, we have 9 months. How much? Next we have 2 lakhs. When is it issued? On 30th September till end. 6 months. So into 6 by 12. So this comes to, so total is 14,75,000. So you can use these both methods to find out the weighted average number of shares, but we'll be using cumulative only. All of you clear? Now I found out weighted average. So you take EAESH divided by weighted average number of shares, you got basic EPS. That much if you remember, enough. Aita? Next we have a concept of diluted EPS. Okay, what is diluted EPS? Diluted andre, see, you would have issued some instruments. Aita? Right now they are not equity shares, but they will be, those instruments will entitle the shareholders for equity shares in the future. Ivat convert agala. The best example for, they are called potential equity shares. What are potential equity shares? Right now they are not equity shares, but they will be converted into equity shares later. Alva? Now suddenly what will happen? This year, say suppose best example for potential equity shares is convertible debentures. Aita? This year they are not yet converted. The number of equity shares you have is 10,000. Suddenly in the next year they get converted. Okay. Now what happens? Number of equity shares will increase. Suddenly people will worry. Arey, last year it was 10,000. Now it has become 15,000. Why? They have issued more shares. Please understand, whenever denominator increases, no, EPS will drop. People will be worried. Ayo, why EPS dropped? Performance declined. Arey, no. It is because of, we had these potential equity shares, convertible debentures, which has suddenly got converted into equity shares. Aita? Or else people, shareholders in ankotare, oh, the performance has declined. Anta. So what we'll do is, if there are any potential equity shares that which can get converted into equity shares in later, the effect of that also we'll take it now only, and we'll give it as diluted EPS. It is not yet converted. We will do the calculation as if it is converted. Understanding? Sir, converted under from when? Say suppose we have convertible debentures. Aita? It is not yet, it is potential equity share only, but it is not yet got converted into equity shares. At some time later it will happen. But for DPS purpose, I will consider that it is converted this year only. From when? Default assumption. If nothing is told, we will assume that these convertible debentures are converted into equity shares from the beginning of the current year. Default assumption. Okay. Now what will happen? Automatically your denominator, that will increase. When convertible debentures, when they convert into equity shares, some changes in P&L also will happen. Tell me what? Until the time they are debentures, you will be paying them interest. Since interest you are paying, that will be shown as expense. Since you are showing something as an expense, you will get a tax benefit. The moment you convert, will you pay interest? No. Will you get the tax benefit? No. So those adjustments also you have to make in the numerator. Now what will happen? Here you increase the denominator. In numerator also, the interest which you have subtracted, add it back. The tax benefit which you will not get, subtract. Understood? So that's why for diluted EPS the formula is like this. It's adjusted earnings divided by weighted average number of equity shares. In this weighted average number of shares, I will also consider potential equity shares. It can be anything. Now in my example I have taken convertible debenture. Any instrument which will entitle the holder for equity shares in the future, that is called potential equity shares. With various, now share options, share warrants, idella know. Today it's not equity shares, but later it will entitle, correct? It will entitle them as equity shareholders. Okay. What is the default assumption about potential equity shares? That they are issued. We'll assume that it is issued in current year. When? At the beginning of the current year. Only one exception is there. The exception is, Say suppose the convertible debentures only was issued on 30th September. Convertible debentures ne ee varsha 30th September issue ಮಾಡಿದೀವಿ. Now can you assume that it is issued from beginning of the year? No. Convertible debentures itself is issued on 30th September. That means while doing the diluted EPS calculation, you have to assume that shares are also issued from the date of issue only. Did you understand? If it is issued much before only, then your assumption is it is converted at the beginning of the year. Did you understand, all of you? Matter. One thing about bonus issue, share split, reverse split you should know. What is share split or bonus issue? Bonus andre shares given without any consideration. Share split andre maybe you had face value of 10 rupees, one share, you have divided into two shares of 5 rupees each. That is called what? Share split. Now whenever share split or bonus issue is happening, no, immediately number of shares will increase. And are you getting any capital? No. Share split allo capital anta in barta illa. Bonus allo, are you receiving money and issuing shares? No. So whenever bonus issue happens, suddenly what will happen? The number of shares will increase and EPS will drop. People will say ambo. So that's why whenever bonus shares are issued in the current year, what will you do? You will do the calculation in such a way that as if the bonus shares are issued from the beginning of the previous year. The calculation should be done that way only. Sir, it was issued in this year, I know. But while doing the calculation, how you have to do? As if it is issued from the beginning of the previous year. If you just do it for current year, no, there will be a huge drop in EPS, people will do ambo. So adike will do the calculation in such a way that it is issued from the beginning of previous year. That is what we'll do for bonus issue and share split. Understood? Sir, if you have partly paid up equity shares, what we'll do? The question is, say suppose your face value is 10 rupees. Aita, but paid up is how much? 5 rupees. And the remaining 5 rupees maybe they have not called. All of you understood? Now say suppose I have 50,000 equity shares which has face value of 10. Idralli 30,000 equity shares is fully paid up. Andre 10 rupees ge 10 rupees is paid. 20,000 equity shares is partly paid up. And the rupees only 5 is paid. And both the shares are outstanding from the beginning of the year only. Tell me in denominator how much I should take for the calculation. 30 plus 20, 50. We will take it like that. Will that be correct? No. 30,000 is fully paid up. That is okay. But 20,000 is partly paid up. Taking that fully is not a correct thing. So then what to do? Find out equivalent. Under 30,000 is fully paid up. No, I will not touch. But this 20,000 is there. No. 20,000 alli, how much money I have got? Into 5. And I have got 1 lakh. Divided by 10. Now I am converting into equivalent number of shares. This is what did I do? 10 rupees was paid. I mean 10 rupees is the face value, but they have paid only 5. And what I am basically doing is 2 shares I am considering it as 1. Like 1 share has paid only 5 rupees to us. How to convert it? Do this. Number of shares into paid up divided by face value. It will get converted into equivalent number of shares. Now how much will I take in denominator? 10 plus 30. I will take 40,000 in the denominator. Make sense? If you have partly paid up shares, that is what you will do. Convert the partly paid up into fully paid up by multiplying this fraction. What is that fraction? Into partly paid up by FV, face value. All of you clear? Okay, done. So options and share warrants. So what is this options and share warrants? These are classic examples of potential equity shares. The options ಏನಂತಂದ್ರೆ that is an instrument which will later entitle the shareholder with an equity share. Should we consider this for diluted EPS? Should we consider options and warrants for diluted EPS? Yes. Correct? No, it is a potential equity share. No, tomorrow it can get converted into equity share. Generally what happens in options or warrants is sometimes they'll allow you to exercise the shares for free. Sometimes what they'll do is if the share is 80 rupees in the market, they'll ask you to pay 30. And the discount of 50 they are giving. So both are possible. Sometimes they'll allow you to exercise for 30, lower than market value. Sometimes they'll give it out for free. If they give it out for free, calculation is exactly like what? Bonus shares. Alva? How will you treat it? From the beginning of the previous year. Sir, if they have received 30 rupees out of 80 rupees, then we have a slightly different calculation, which I will tell you. Okay, we'll keep that in hold. One more discussion what I have to take up is right issue. If we do right issue, any calculation I have to do? Bonus issue gotaitu from the beginning of previous year. Rights issue? See, please understand, rights issue again, option and warrants, it is very similar. Now whatever I tell is applicable for both right issue and option warrants, but you see it separately. First I'll talk about rights issue. Now what is rights issue? Me allowing the equity shareholders to purchase my shares at a price lower than market price. Andre ಈಗ market price ಏನಾರು 80 rupees ಇತ್ತು ಅಂದ್ರೆ I will give right shares for 50 rupees. Correct? Now does this has any bonus element? In bonus shares, entire share is free. So I'm doing the calculation accordingly. In right shares, am I receiving the exact fair value? No. Fair value was 80, I am receiving 50. So I am getting a discount of 30, and that is considered to be what? Bonus element. That bonus element will have an effect of dilution. You'll say, sir, no, right shares is issued, but you are issuing right shares at a little lower price, no? There will be some bonus element in right shares because you are giving some discount. So what we have to do is, whenever right shares is issued, first we will find out that bonus element. You understood now what is bonus element? 80 rupees worth share I am giving it at 50. Alva? A bonus element I have to give treatment. First what I will do is, I will find out bonus element. How to find out bonus element? It's X right price divided by everyone focus. What is X right price? Just before the rights issue happens, whatever the market price will be there, no, that is X right price. Once the right issue happens, what will be the market price? No, that is come right price. Will there be a change? Yes, no. Whenever the right issue is happening, no. Before that, the market price of the share will be higher. Because right issue will happen, people will get shares at a discount. So the market price of the share will go up. So come right price will be, X right price will be higher. Once the right issue happens, now everything is gone, no? The share price will drop. So generally X right price will be higher than come right price. So by doing this formula, I will get the bonus element that is there in the shares. Clear? Sir, how to find out come right price? Come right price andre na? Come right is the price after the market price. Sir, what to do? Out of this both two, no? This X right price they would have given in the question only. Hey, I think ulta we have written. Wait a second. It is come right, X right. Come andre before, X andre after. Come right price before market price is already given in the question. No need for you to calculate. X right they would have not given. And after right issue admele market price ಎಷ್ಟು ಬಿತ್ತು ಅಂತ ಹೇಳಿರಲ್ಲ. So then what to do? We have to calculate it theoretically. That's why we call it theoretical X right price. We have to calculate. What is the formula for this? Anyone remember? Number of shares existing into come right price plus number of right shares issued into right price divided by number of equity shares after rights issue. Did you understand? By solving this, you'll get what is the theoretical X right price. What is the formula? Number of existing shares in the before right issue. What was the existing number of shares? Into come right price means the market price before rights issue plus number of shares that you have given as right shares into right price andre ಏನು? Right price andre of the price that you have given for right shares. Now in my example 80 was market price, but I have offered the right shares at 50, no? That 50 is right price divided by number of equity shares after rights issue. Maybe existing you had 50,000 and you have given right shares of 10,000. So total shares is 60. That 60 will come in the denominator. The moment you get this, you will get theoretical X right price. By putting that theoretical X right price here, you will get a bonus element. Aita? Sir, I got bonus element. It will be something like 1.05, 1.06. Now what you have to do? Now this is bonus element. No, treat this bonus element as bonus shares. That means as if you have issued it from the beginning of the previous year. Sir, what will I do, sir? Very simple. Now say suppose I'll take one small example. On 1st April we already had 10,000 shares. On 30th September I have given 1:4 rights issue. Aita? That means how many right shares I have offered? 1:4. And for every 4 shares I have given 1 share as right shares. That means how many right shares we have? 10,000 divided by 4. And 2,500 shares I have offered as right shares. Okay. So 2,500 in 1:4. Say we have calculated bonus element and bonus element is coming to 1.05. Bonus element calculate ಮಾಡಿದೀವಿ. How to calculate? Come by X. Now what you have to do is, while calculating weighted average number of shares, we are following cumulative method, alva? So first what will I do? 1/4. I'll take 2 years. Right now we are in 24-25. I'll also take 23-24. Aita? First, what is the first cumulative which I'll take for weighted average? First cumulative I'll take is 10,000 shares. Take that 10,000 shares. Into, what will you do? Into? Till the next change. When is the next change happening? Next change is happening on 39. I forgot how we did weighted average. After 6 months. So 10,000 into 6 by 12. Normally, till here I have not changed. One change I will do is, I will multiply the bonus element. How much is my bonus element? 1 point. How much you'll get? 5,000 into 1.05. 5250. Same normal calculation only. To the opening cumulative, first cumulative, I multiplied bonus element. Sir, right issue is happening on 39 now. Why did you multiply bonus element for the first one only? Because, what did I do? Bonus element heng treat madbeko? Beginning of the previous year. That means even while preparing previous year financial statements, say suppose previous year how much the shares was there? Maybe 10,000 is there. Current year opening al 10,000 is there. Previous year also number of shares will be 10. Previous year also, what will I do? Multiply bonus element. Because bonus element I should treat it as if it is issued from the beginning of previous year. So previous year also I will multiply the bonus element. Current opening also I have multiplied bonus element. Done. Next change is happening on 39. So what is the next cumulative? 10,000 already there. You have issued how many shares? 2,500. So the next cumulative is 12,500 into, when is the next change? You can directly go for last 31st March, which comes to 6 months. Into, will I do bonus element again? No, I will not do the bonus element during right shares. Tell me why. Because this 12,500 already includes the effect of bonus, no? 10,000 plus 2,500 right shares. Two combine agide. Bonus element is already there. Now don't multiply. Only for the previous cumulatives you will apply bonus element. Not for, once the right share is happening, only bonus element beda. Bonus is already there. You have already included the right shares. To opening and previous year, you have to multiply bonus element. And this bonus element multiplication, this logic applies only if you are following cumulative method for weighted average. You understood? Right issue adaga don't multiply bonus element because bonus element is already there. Rights issue is issued alva. All of you clear? So that's how you'll find out. Ideshtayitu idu 6,250. So your weighted average number of shares is 11,500 shares. All of you understood how to do it? Clear? you'll apply bonus to the opening and to the previous year, because you have to, bonus element is issued from the beginning of previous year. Clear? But from rights issue you will not do, because the bonus is already there, element is already included via right shares. Let's go to the next point, share options athwa warrants. How to treat this? Is bonus issue, right issue diluted the potential equity shares? Question. Is right shares or bonus shares potential equity share? No, that is normal. Only your convertible debentures or your share options or warrants, these are potential equity shares. This you will consider for DPS. How to do if share options is there? All of you again focus, very important. Share options heng kodtare andre, whenever you can exercise alva. Say suppose the market price is 150 rupees. That means if you have to purchase our share, normally in market how much you have to pay? 150. But under share option I have told you, even if you pay me 100 rupees, you can buy it. I have given you an option or a warrant, whatever. You can exercise, pay 100 rupees and take my share. Does this have bonus element? Correct? No, 150 worth share, I am giving it for 100. Okay. Now before coming to this calculation, we know that market price of the share is 150. I am issuing shares at 150 only. Am I supposed to do anything? Any dilution is happening? Normal market price of the share is 150. I also issue it at 150 and I will this come in dilution? Hey, no, that is normal issue of equity shares. Whereas if you come to options, is it normal issue of equity shares? See, normal issue of equity shares will not come in DPS. One question I will ask. Now you know that by 30th June you are issuing new equity shares. Will you consider it as diluted EPS? So you know that next year I will issue new equity shares. Will you consider it as diluted EPS in the current year? No, that is normal issue of equity shares. In share options or warrants, if market price is 150 and even if I had received 150, it would have become normal issue of equity shares. I would have not considered it for diluted EPS calculation. But here what I am doing, 150 worth share, I am giving it at 100. Dilution is happening. So I have to consider it for DEPS calculation. All of you clear? So what you have to do? Very simple calculation. Today market price is 150, but I am allowing this warrant at 100 alva. So say suppose I am giving 10,000 shares under this warrant. Okay, now simple calculation I will do. By issuing 10,000 shares under warrant, how much money I am getting? 100 rupees per share or 150 rupees per share? I am getting 100. So 10,000 into 100 you do. How much money are you getting? 10 lakhs. Today if you give 10,000, if you convert 10,000 share warrants, how much money you will get? 10 lakhs. This money, if you had to raise it from normal market, how many shares you were supposed to issue? Because right now your market price is 150. So ಎಷ್ಟು share ನೀವು issue ಮಾಡಬೇಕಿತ್ತು to raise the same 10 lakhs? 6,667. That means what money you could have raised by issuing just 6,667 shares. For that you are issuing 10,000 shares. So what is the bonus element of the shares here? Bonus element is 10,000 minus 6,667. That is 3,000. It's as good as I've issued 3,333 shares for free. So how much will I consider as diluted EPS? I mean, how much will I consider as diluted number of shares? It's only 3,333. All of you understood? Will I consider the entire 10,000 for DEPS calculation? Now I have issued some warrants, share warrants or options. These are what? Potential equity shares. That means you have to consider them for diluted EPS calculation. Will I consider 10,000? I have issued 10,000 shares only. Will I consider 10,000? No, I have to consider only the free component. Out of 10,000, how much is the free component? 3,333. 6,667 again, and actual of the discount is it's like normal. That is not dilution. But it's as good as I have issued 3,333 shares for free. So I will consider 3,333 shares in your diluted EPS calculation. That is the diluted EPS. 667 is not diluting. That is normal issue of shares. All of you understood? Always understand one thing about diluted EPS. Basic EPS should always be more. Diluted EPS should always be less. That's why it's called diluted, no? Because your number of equity shares will increase. Hence, the diluted EPS should dilute. Andre, EPS should drop. Then only it is called diluted. Imagine, basic EPS is 5. And once you do your diluted EPS calculation, it becomes 7. Is that a diluted EPS? No, it became anti-dilutive. If your computation becomes anti-dilutive, you should not disclose that and you should not take the effect of that potential equity share at all. We'll discuss that question also. Remember this point. When will you show diluted EPS? Only when the value is dropping. If diluted EPS is becoming more than basic EPS, will you consider that PES? No. At that point, EPS becomes anti-dilutive. I will not consider those potential equity shares. I will consider only dilutive potential equity shares. In my share warrants, I have issued 10,000. Is the entire 10,000 dilutive? No. How much is dilutive? Only 3,333. For 6,667, I have received money, no? It's like normal issue of shares. Did you understand? Agree with me? Okay. Now my one more question. We have issued shares for no consideration. Will I consider them? I have issued shares and I have not received any consideration. Options, I have issued options. But I am not receiving any money. I am allotting free shares. Will I consider them for diluted EPS? You get 10,000 shares kottidinappa. Nim hatra 1 paisa iskotalla. I am allotting free shares. Now tell me. Now out of 10,000, entire 10,000 is dilutive. Did you understand? Hello? If I don't receive single paisa also, then entire 10,000 options is dilutive. But in my example, what did I do? 150 was market price. I received 100. That means in my case dilutive is 3,333. That is all I will consider. Understood? Is right share potential share? No, they will not come for diluted. Bonus shares is potential equity share? No, they will not come for diluted. Basic rights, all this will come in basic EPS only. Aita? Diluted EPS ಗೆ ಯಾವ್ದು ಬರುತ್ತೆ? Convertible debentures, convertible instruments, ಅಥವಾ your share options or warrants. What is share options? You are allowing them to buy equity shares at 0 rupees or at some less than fair value. If it is 0, then entire options whatever you have issued, it is dilutive. If you have issued it at part consideration, then you have to find out what is the dilutive component and consider that for DEPS calculation. All of you clear? It's enough of discussion. We have discussed a lot. We'll directly see the questions. Of course. Banipa. Now let's see. Should appropriation to mandatory reserves, again RTP Jan 26 question, be excluded from net profit attributable to equity shares? Andre, see the question. AB Limited is a company engaged in manufacturing industrial packaging unit. As per the terms of an agreement entered into with its debenture holders, the company is required to appropriate adequate proportion of the profits to a specific reserve over the period of maturity of the debentures, such that at the redemption date the reserve constitutes at least half. As such, appropriations are not available for distribution to equity shareholders. AB Limited has excluded this from the numerator in the computation of basic EPS. Is this treatment correct? Basically, while calculating basic EPS, what is our numerator? Earning available to equity shareholder. Only one thing we'll subtract was preference dividend. In this, what they have done now, out of the profit we have earned in current year, some amount they have transferred it to a separate reserve. Debenture. If you are foundation students, they have transferred it to debenture redemption reserve. Now their question is, sir, out of current year profits, which was 10,000, say suppose, 5,000 they have transferred it to DRR. Now should I minus that 5,000 in the numerator while calculating basic EPS is the question. The answer is no. Aita. What did we say? Tell the earnings available to equity shareholders. Whatever is earned by the company and whatever is there in reserves, no, it belongs to whom? ಯಾರಿಗೆ? ಓನರ್ಸ್ಗೆ. ವೇರ್ ವಿಲ್ ರಿಸರ್ವ್ಸ್ ಕಮ್? ಅಂಡರ್ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ ಫಂಡ್ ಓನ್ಲಿ. ನೋ, ರಿಸರ್ವ್ ಏನಾದ್ರು ಕರ್ಕೊಳ್ಳಿ ನೀವು, DRR ವಾಟ್ ಎವರ್ RR, ರಿಸರ್ವ್ಸ್ ವಿಲ್ ಕಮ್ ಅಂಡರ್ ಶೇರ್ ಹೋಲ್ಡರ್ ಫಂಡ್ಸ್. ಅಂದ್ರೆ ಇಟ್ ಬಿಲಾಂಗ್ಸ್ ಟು, ದಟ್ ಪ್ರಾಫಿಟ್ ಬಿಲಾಂಗ್ಸ್ ಟು ಓನರ್ಸ್. ಆಯ್ತಾ? ಈವನ್ ಇಫ್ ಯು ಅಪ್ರೋಪ್ರಿಯೇಟ್ ಇಟ್, ಐ ಡೋಂಟ್ ಕೇರ್. ಸೊ ದಿಸ್ ವಾಟ್ ಎವರ್ ಐವ್ ಟ್ರಾನ್ಸ್ಫರ್ ಟು ರಿಸರ್ವ್ ವಿಲ್ ನಾಟ್ ಬಿ subtracted. ಆಯ್ತಾ? ಅರ್ನಿಂಗ್ ಅವೈಲೇಬಲ್ ಟು ಇಕ್ವಿಟಿ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ ಅಂದ್ರೆ, ಯಾ, ಇಟ್ ಕೆನಾಟ್ ಬಿ ಡಿಸ್ಟ್ರಿಬ್ಯೂಟೆಡ್ ಟು ದೆಮ್ ಆಸ್ ಡಿವಿಡೆಂಡ್, ಬಟ್ ಇಸ್ ಇಟ್ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ ಫಂಡ್ಸ್? ವಾಟ್ ಎವರ್ ಇಸ್ ದೇರ್ ಇನ್ ರಿಸರ್ವ್, ಇಟ್ ಬಿಲಾಂಗ್ಸ್ ಟು ಶೇರ್ ಹೋಲ್ಡರ್ಸ್. ಇಟ್ ಇಸ್ ದೇರ್ ಪ್ರಾಫಿಟ್. ಅರ್ಥ ಆಗ್ತಿದ್ಯಾ? ಸೊ ಯು ವಿಲ್ ನಾಟ್ ಸಬ್ಟ್ರಾಕ್ಟ್ ಇಟ್. ಸಿ, ದ ಅಪ್ರೋಪ್ರಿಯೇಷನ್ ಮೇಡ್ to such a mandatory reserve created for the redemption of debentures would be included in the net profit attributable to equity shareholders. That means you will not subtract it. For the purpose of calculating basic EPS, the net profit or loss for the period attributable to equity shareholders should be the net profit or loss for the period after deducting preference dividends and any attributable tax, and the dividend distribution tax that you can subtract. Any appropriation to any other reserve, you will not subtract, because reserves is still shareholder funds. All of you understood? Good question, though it was theoretical. ಅಂದ್ರೆ ಸಖತ್ತ ಕನ್ಫ್ಯೂಸ್ ಮಾಡಿದ್ದಾರೆ. ನಾವು DRR ಹಾಕಿದೀವಿ, ಅದರಿಂದ ಡಿವಿಡೆಂಡ್ ಡಿಸ್ಟ್ರಿಬ್ಯೂಟ್ ಮಾಡೋಕ್ಕಾಗಲ್ಲ. ಎಲ್ಲ ನಾನ್ ಸೆನ್ಸ್. ರಿಸರ್ವ್ ಅಲ್ಲಿ ಹಾಕಿರೋ ದುಡ್ಡೇ ನಮ್ದು, ನಮ್ದ್ರಿಂದ ನೀವು ತೆಗೆದಲ್ಲಿ ಹಾಕಿದ್ದೀರಾ. ಆಯ್ತಾ? ಏನಕ್ಕೆ? ವೈ ವಿಲ್ ವಿ ನಾಟ್ ಅಲೋ ಇಟ್ ಟು ಯೂಸ್ ಆಸ್ ಡಿವಿಡೆಂಡ್? ಫಾರ್ ಕಂಟ್ರೋಲ್. ಬಿಕಾಸ್ ಐ ಆಮ್ ನಾಟ್ ದ ಓನ್ಲಿ ಪರ್ಸನ್ ಇನ್ ದಿ ಎಂಟೈರ್ ಕಂಪ್ನಿ. ನೋ, ವಿ ಹ್ಯಾವ್ ಡಿಬೆಂಚರ್ ಹೋಲ್ಡರ್ಸ್, ವಿ ಹ್ಯಾವ್ ಕ್ರೆಡಿಟರ್ಸ್, ಎಲ್ಲರನ್ನೂ ಸೇಫ್ ಗಾರ್ಡ್ ಮಾಡಬೇಕು. ಅದಕ್ಕೆ ಏನು ಹೇಳಿರ್ತೀವಿ? ಪುಟ್ ಟು DRR, ಬಟ್ ಡೋಂಟ್ ಅಲೋ ಇಟ್ ಫಾರ್ distribution as dividend ಅಂತಿರ್ತೀವಿ. ಬಟ್ ಇಟ್ ಬಿಲಾಂಗ್ಸ್ ಟು ರಿಸರ್ವ್ಸ್, ಇಸ್ ಕಂಪ್ಲೀಟ್ಲಿ owner's profit. That's why it comes under shareholder funds. No? Okay. Come to second question. XYZ Limited has a wholly owned subsidiary, BC Limited. The group prepares consolidated financial statements for the year ended 31st March. You know, no, consolidated. Holding subsidiary. Huh? For consolidated also you have to give EPS. Yes. If parent prepares consol EPS and separate EPS, for separate also you have to give EPS. For consol also you have to give EPS. Normal. Nothing big about it. In XYZ Limited separate financial statements, that means what will you understand? XYZ is the parent. It will prepare its own separate financial statements also. It will prepare consol also. Correct alva? Separately it has a loss of 2 crore. Okay. While the consolidated profit for the group during the year is rupees 40. Andre consolidate ಆದ್ಮೇಲೆ ಬಂದಿದ್ದ ಪ್ರಾಫಿಟ್ ಎಷ್ಟು? 40 lakhs. ಸ್ಟ್ಯಾಂಡ್ ಅಲೋನ್ ಅಲ್ಲಿ ಇದ್ದಾಗ ಇದ್ದಿದ್ದ ಲಾಸ್ ಎಷ್ಟು? 2 crores. ಡನ್. ಫಾರ್ ಬೋತ್ ಆಲ್ಸೋ ಹ್ಯಾವ್ ಟು ಕ್ಯಾಲ್ಕುಲೇಟ್ ಬೇಸಿಕ್ EPS, diluted EPS. XYZ Limited has 5 lakh shares outstanding. Further, it has granted options. So what are these options? These are potential equity shares. In respect of such options, 1 lakh shares are considered to be issued for no consideration. If I am issuing for options, I am issuing for no consideration. And what is the dilution? Entire 1 lakh shares is dilution. I will consider it for DEPS. There are no changes in income or expenses that are expected from the issue of equity shares. ಆಯ್ತು, ಏನು ಇಲ್ಲ. ಅಂದರೆ ಜನರಲಿ ವೆನ್ ಕನ್ವರ್ಟಬಲ್ ಡಿಬೆಂಚರ್ಸ್ ಗೆಟ್ಸ್ ಕನ್ವರ್ಟೆಡ್, ನೋ ಇಂಟ್ರೆಸ್ಟ್ ಅವೆಲ್ಲ ಅವಾಯ್ಡ್ ಆಗುತ್ತೆ. ಬಟ್ ಆಪ್ಷನ್ಸ್ ಅಲ್ಲಿ ಏನೂ ಇಲ್ಲ ಅಂತ ಹೇಳಿದ್ದಾರೆ. ಓಕೆ. ಕ್ಯಾಲ್ಕುಲೇಟ್ ಬೇಸಿಕ್ ಆ್ಯಂಡ್ ಡೈಲ್ಯೂಟೆಡ್ EPS. ನೌ ದ ಕ್ವೆಶನ್ ಇಸ್, ದ ಎಂಟೈರ್ ಕ್ವೆಶನ್ ಇಸ್ ಬೇಸ್ಡ್ ಆನ್ one logic that I told. While calculating diluted EPS, basic ಗಿಂತ diluted ಕಡಿಮೆ ಆಯಿತು ಅಂದರೆ it is diluted EPS ಅಲ್ವಾ? If diluted is more than basic, is it diluted EPS? No. In that case you should not present that EPS only, ಅಥವಾ you should not consider that potential equity share only. That's what we learned. No, this entire question is based on that. All of you focus. Now in consol, what was the basic EPS? First let's see consol. 40 lakh was the income, divided by what is number of shares? See, XYZ has 5 lakh shares. Consol ಅಲ್ಲಿ ಎಷ್ಟು ಪ್ರಾಫಿಟ್ ಅರ್ನ್ ಮಾಡಿರೋದು? ಎಷ್ಟ್ರಿ? 40 lakhs. So earning is how much? 40 lakhs divided by number of equity shares. So your basic EPS comes to 8. Any doubts here? No. Now similarly we'll find out diluted. How much is your earning? 40 lakhs, but now your equity shares will become 5 plus 1, that options. Now your weighted average number of shares becomes 6 lakhs. DEPS is 6.66. Can I present it? Yes. Basic 40 ಇದೆ, diluted EPS basic 8 ಇದೆ, diluted EPS 6.67. It has decreased. I can present it as diluted EPS. ಅಲ್ಲಿ ಏನು ಪ್ರಾಬ್ಲಮ್ ಆಗಲಿಲ್ಲ. Okay, let's come to standalone. What was the profit in standalone? It was 2 crores. 2 crores divided by number of shares was 5 lakhs. Guys, don't forget, in console agirbodu or standalone agirbodu, the capital will be of parents only, no? So that's why number of equity shares is same. So 2 crores divided by 5 lakhs, and the basic EPS came to minus 40. Why? Because 2 crore is what? Loss alva. So you've got EPS in negative. Let's find out DEPS. Same I'll do. Minus 2 crores divided by, after in DEPS how many shares? We had 5 and 1 lakh option is there. So this becomes 6. So what is your diluted EPS? Madipa. It becomes minus 33.33. Did you see the problem? Did the diluted EPS dilute? No. Basic EPS minus 40 ittu. Diluted EPS minus 33 ಇದೆ. ಅಂದ್ರೆ did it increase or decrease? Increase noda. Minus 40 is greater or minus 33 greater? Minus 33 is greater. So did the EPS dilute? No, it increased. Basic EPS ಗಿಂತ diluted EPS ಜಾಸ್ತಿ ಆಗೋಯ್ತು. In that case, what did I tell you? Don't consider such potential equity shares. ಅಂದ್ರೆ in denominator take and present 40 only. Did you understand, all of you? Diluted EPS should always dilute. ಅಂದ್ರೆ ಬೇಸಿಕ್ ಗಿಂತ ಕಡಿಮೆ ಇರಬೇಕು. ಈ ಕೇಸಲ್ಲಿ ಏನಾಯ್ತು? ಬೇಸಿಕ್ 40 ಇತ್ತು, diluted minus 33. ಅಂದ್ರೆ it's greater than minus 40, no? So it is becoming anti-dilutive. Don't consider that equity share. Understood? See, it becomes 33.33 minus, which is anti-dilutive. All of you understood? But that problem we did not get in console. Console I'll dilute I have presented. In standalone dilute aglila, I have kept it same. Did you understand? Hello? No doubts, no? One more should be there, no? This is from previous year question paper. We'll see any question if we have. This has the compilation of the last 5 question papers. Come on, India. So we have one question which is asked in Jan 2025 examination. Okay, let's see. So XYZ Limited has provided you the following information as on 31st March 2024. What is net profit after tax? 31,20,000. Number of shares outstanding as on 31/3/24 is 8 lakh. Andre we have to find out EPS as on which year end? 31/3/24 only, and at that year end only the number of shares is 8 lakhs. Average fair value of one equity share is how much? 25, and the market price of that share is 25. Weighted average number of shares under option during 23/24 is 80,000. They have only given the weighted average shares also. Of what? Of option. Will you take options weighted average number of shares for basic EPS, or will you consider that number for diluted EPS? Diluted. Options are potential equity shares. So we'll consider it in diluted, not here. Okay. Exercise price for these options. And if you want to buy our equity shares under option, how much you have to pay? 20 alva. See, is it lesser than fair value or more than lesser than fair value? No. My market price is 25, but I am allowing you to take this share at 20. Do we have dilution? Yes. We have 12% debentures of 100 each, which comes to 30 lakhs. Each debenture is convertible into 4 equity shares. Why is this information important? Because again, convertible debentures are potential equity shares. You have to consider them in the diluted EPS calculation. Our tax rate is 30%. Why tax rate? Because tax benefit will be there now. If convertible debentures is converts to equity shares, the tax benefit is lost. To calculate that, they have given us tax rate. Shall we do the calculation? You have to find out what? Of course, we have to find out basic and diluted EPS. One more thing is there. The company issued one equity share as a bonus for every 5 shares outstanding as on 1st October 2023. So it further issued 2 lakh equity shares of 10 each as on 1st Jan 2024, and the financial year of the company ends on 31st March. So find out basic EPS and diluted. So first basic consider. Basically ಯಾವುದು dilutions ಬರೋದು ಬೇಡ. Forget options. ಅದೆಲ್ಲ ಬೇಡ. What all will come for basic, you tell me. Options will not come. Convertible, that will not come. So what all will come? Your normal 2 lakh issue will come, and bonus, will it come in basic? Yes, bonus will come in basic. That's all. For basic only these two. Diluted ಆಮೇಲೆ ನೋಡೋಣ. ಆಯ್ತಾ? First we are calculating basic EPS. How much is the first? How to calculate basic EPS? Profit attributable to equity shareholders. How much is the profit attributable to equity shareholders? It is 31 lakh. So in numerator I will take 31 lakh 20,000. I will divide it by weighted average number of shares. What weighted average number I know? 8 lakh? No sir, we have to find out. So weighted average. Please understand, the biscuit in question is 8 lakhs they have told us outstanding number of shares. Can you see? 8 lakh is the outstanding number of shares. As on when? 31st March 24. Bonus has happened before. Issue of that 2 lakh shares has happened before 31/3/24. Andre the 8 lakh number which have got is after the effect of bonus also and the 2 lakh that you have issued also. Did you understand? So we have to do the backward working. That means this is the share as on 31st 3/2024. ಆಯ್ತಾ? On 1st Jan ಯಾವಾಗ ಇಶ್ಯೂ ಮಾಡಿರೋದು? 1st Jan I have issued 2 lakh equity shares. I have issued 2 lakh equity shares. And before issue of that 2 lakh, how many shares I had? 6 lakh equity shares. This 6 lakh gu munche innenagiತ್ತು? Bonus ಆಗಿತ್ತು. When? On 1st. This 6 lakh is after bonus. What is our bonus ratio? Our bonus ratio is, for every 5 equity shares we have given 1. Andre, if at all I had 5 equity shares, today I will be having 6. So if 6 lakh is 6, then I want to understand what is 1. In barate, if 6 lakh divided by 6 into 1. If 6 lakh is 6, do cross multiplication. You understood how I did? Those who have 5 equity shares, they will get 1 and it becomes 6. If 6 lakhs is after bonus, that is 6. What is 1? It comes to 1 lakh. So how much is your bonus shares? 1 lakh. And before bonus, how much you had? $5 lakh is what you already had from the beginning of the year. On 1st October, 1 lakh bonus happened. And on 1st January, you have issued shares of 2 lakhs. Did you understand that? This is the breakup of the question. Now you have to find out the weighted average number of shares. Understood? Screen out. So the number of shares which was already outstanding from the beginning of the year was 5 lakhs. Then on 1st October you have given bonus of 1 lakh. Then on 1st January you have issued shares of 2 lakh. That is how it has become 8 lakhs in the end. So you have got the workings. Now you calculate weighted average number of shares. Which method will we use? Cumulative method only. So first I will take what? Date 1st October 23. First we had 5 lakh. Into till the next change. Next change is happening when? the next change is happening here on 1st October. On 1st October 2023. So 4, 5, 6, 7, 8, 9. It comes to 6 months. Okay. Then one more thing is, next we have bonus. Which is issued when? Idik barana, 6 by 12 barana. Before that, one more small change I have to tell. Next bonus has happened on 1st October only. I understand, no problem. But what have we learned for bonus? We have to do it as if it is issued from the beginning of the previous year. And should I consider 110 only as the data? No, I will consider 1/4 only as the date. Did you understand? I know it is issued on 110 only, but what did we learn? From the beginning of the previous year. So I will take it as 1/4 only. So I will make this 5, 6 lakhs. Now you directly take the next change. When is the next change happening? 1/1/24. Allivargu ಎಷ್ಟು ತಿಂಗಳಿದೆ? It is 9 months. Okay. 9 by 12. So next change, how much it will come to? 6 lakh into 9 by 12. You understood now why I took 6 lakh? 5 lakh plus 1 lakh. Bonus, you have to take as if it is issued from the beginning of the previous year. How much? 6 lakh into 9 by 12. 4 lakh 50,000. Next issue has happened on 1/1/24. What is the cumulative? 6 was there plus 2 you have given, so it has become 8. Into the year end will happen in 3 months. So this becomes, so your weighted average number of shares is, all of you understood how we did this? Are we clear? So this will go in denominator, 6 lakh 50,000. So what is your basic EPS? So it's 4 point. Correct? Now let's find out diluted EPS. First of all, let's come to numerator. Any changes will happen in numerator because of diluted EPS. Hey, we are issuing convertible debentures, alva. The moment you convert, what is the assumption? If nothing is told, these convertible debentures, we will do the calculation as if it is converted from the beginning of the current year. If I convert it, then will I have interest expense? No, but already I have subtracted that interest expense. So what I have to do? Add back interest expense and subtract the tax benefit. Right now, what is your profit? 31 lakh 20. The interest is already subtracted. That will not be there now when you convert. So add back the interest. How much is interest? See, it's 30 lakhs into 12%. So interest comes to 30 lakh into 12%, and 3 lakh. So that interest expense will not be there. Please add back 3 lakh 60. Now that you are not showing this 360 as expense, you will not have tax benefit. Subtract. How much is tax benefit? 3 lakh 60 into tax rate, that is 30%. So, what is your numerator? 33 lakh. That is your numerator. Okay. 33 lakh 72,000. No. Now divide it by weighted average. What all will increase in weighted average? We already have our basic destide. Basic is already 6 lakh 50,000 ide. Ade nange bidi. Further, what all is increasing? Your convertible. How much you are converting? Each debenture, you will convert it into 4 equity shares. How many debentures we have? 30 lakh divided by 100. And then we have 30,000 debentures. Each debenture will convert it into 4 equity shares. So 30,000 into 4. It will become 1,20,000 shares. So what you have to do? This denominator will further increase by 1,20,000. Then anything else is there? We have options, correct? How much is options? Whenever you have issued options and whenever you are calculating diluted EPS, find out the dilution. How to find out dilution? How many options have you issued? We have issued 80,000. We have issued 80,000 options. How to find out the dilution? 80,000 options I have issued. By issuing 80,000, how much money I am raising? Into 20. So how much money I am getting? 16 lakhs. If I had normally issued normal shares, how many shares I was supposed to issue? 60? Alva. What money you could have raised by issuing 64,000 shares? For that you have issued how many shares? 80,000. That means how much is the dilutive element? 16,000. It's 80 minus 64. Did you understand? 80,000 issue ಮಾಡಿ ನಿಮಗೆ ಬಂದಿದ್ದು ದುಡ್ಡು 16 lakhs. If you had normally raised, if you have issued 64,000 shares, you would have got that money. But you have issued 80,000. How much is the dilutive element? 16. Alva? That 16 I will consider it is there from the beginning of the year. So further I will add how much? 16,000. Now tell me, 33 lakh 72,000 divided by 7 lakh 86,000. What is your diluted EPS? It's 4.29 per share. Understood? All of you. Nice question for 5 marks. So you understood? And one more thing you observed. This potential equity shares. If nothing is told, what is our assumption? As if we have issued it from beginning of the year. Now if you have to do weighted average, then what you would have taken? Into 12 by 12 only you would have taken. No? That's why I have added it directly. ಈಗ 1,20,000 na beginning of the year anta ಮಾಡ್ಕೊಂಡ್ರೆ into 12 by 12 only you'll get, because the share is outstanding throughout the year. So that's why I've directly added it. The 16,000 also, you're assuming that it is issued from the beginning of the year. So it will be outstanding the entire year. I've taken the full number only. If at all you have that doubt. Why didn't we do weighted average for potential equity shares? We have done. But we did not have any problem is because potential equity shares are issued from the beginning of the year. That is our assumption, if nothing is told. Okay. So this was the question which was asked in May 2024, and last question from AS 20 that we are discussing. Okay, can you read? Read it and try. Exam questions only these are. PYP. We have discussed AS 20 for 1 hour. Next level. On 1st April 23, ABC Limited has given the following information: 50,000 equity shares of 100 each. Very cool. But rupees 80 is paid up by all shareholders. So this comes to rupees 40 lakhs. Why? Because 50,000 into 80 rupees is paid up. No, total capital is 40 lakhs. 2 lakh 8% preference shares we have, and 10,000 12%, which is convertible into 3 equity shares of 100 each. On 1st July 2023, the remaining 20 rupees was called up and paid up by all the shareholders except one shareholder holding 10,000. On July, Papa, we called up everyone to pay all the remaining 20 also, but all of them paid. No, 10,000 shares. The guy who was holding 10,000 shares, he did not pay. During the year 23-24, the company had a profit of 3,44,000, tax rate is 30%. You are required to compute basic and diluted EPS. Simple, huh? What is the crazy thing about this question? First of all, it is partly paid up. Alva? See, this 50,000 equity shares which we have. For me, for EPS calculation, I need only equity shares. Preference avela begagilla nanage. Aida? I might consider them for diluted. Now my question is, I want to find out weighted average number of shares. Aida? Let's find out only basic EPS. What is the profit that I have to take? 3,44,000, but don't forget, you have to take EAESH, and the earning available to equity shareholders. Do we have preference dividend? Yes, no. So 2 lakh and the 20 lakh into 8%, andre, how much is your preference dividend? 1,60,000. So from 3,44,000, please subtract 1,60,000. What is remaining? 1,84,000 is what you have to take in the numerator. Did you understand? Preference dividend should be subtracted. Divided by weighted average number of shares. Now our trick is how to find out weighted average number of shares. Focus. First number 50,000 shares is already there at the beginning of the year. Focus. I have 50,000 shares, but is it partly paid up or fully paid up? Until July, entire 50,000 shares is partly paid up. Only on 1st July we called. So what I'll do, 50,000 into, the next change is happening in 3 months. And right now in April, when did we call? July. And April, May, June, after 3 months. So 50,000 into 3 by 12 into one more change I have to do what? I have to convert, Shalva. What did I say to do the conversion? Into paid up value divided by face value. So into 80 by 100. So I will consider 10,000. Okay. This is as on 1st April. Then on 1st July what happened? Papa, out of 50,000, 40,000 people they paid normally, no? So what I'll take 40,000 into the, I will take it till the end. And then July in the end, I will take it till 9. So into 9 by 12. Is there need of any conversion? No need of any conversion, because on 1st July they have made it fully paid up. So this becomes how much? But this remaining 10 is there now. Did they pay? No. So what I have to do? I'll take that 10,000 into 9 by 12 I'll do. Nanda. Students. So this 10,000 people, they have not yet paid the money on 1st July. Correct? No. So 10,000 into same 9 by 12 till the end of the year into, we have to convert it into equivalent shares. So what we have to do? Paid up divided by face value. So into 80 by 100. How much? 6,000. Okay. So therefore, your total weighted average number of shares is 40. So this becomes 46,000 shares. So your numerator was what? 1,84,000. Weighted average shares is 46,000. So your basic EPS becomes, Calci people, 184,000 divided by 46,000. So it is rupees 4 per share. Understood? So please don't forget to use these conversions. Whenever partly paid up shares are there, make sure you convert them to equivalent. How will you convert them to equivalent? Multiplied by paid up value and divided by face value. Are we clear here? Can we go to the next question? All of you should say yes. Okay. So with that we are done with accounting standards 20. Oh, DPS. Okay, you only tell me what is the changes we'll do in DPS. There you go. What all changes will happen in numerator first? Numerator, the convertible debentures will get converted into equity, so interest will be not there. Add back interest, subtract tax benefit. How much is interest? 10 lakh into 12%. And the interest 1,20,000, you add it back. 1,20,000, add it back. And tax benefit is 30% of 1,20,000. Subtract tax benefit. Your adjusted earnings is 2,68,000. So that is the numerator. Your existing weighted average is how much from basic EPS? It is coming to 46,000. Plus what change will come here? That convertible equity shares. We will assume it as if it is converted from the beginning of this year. How many shares? Each debenture is convertible into 3 equity shares. And how many debentures we have? 10 lakh divided by 100. And 10,000 shares will become 30,000 equity share. So that is outstanding for entire 12 months. Just directly add it to 46. 46,000 plus 30,000, this becomes 76. So 2,68,000 46,000 plus 30. Your diluted EPS is 2,68,000 divided by, so how much is DEPS? It's 3. All of you? Correct. Number of shares increased by potential equity shares. And if nothing is told, it's always issued at the beginning of this year. Aita? Other one thing that you should know is mother shares. If convertible debentures itself is issued in May, can you take it as beginning of the current year? No. You can convertible in the equity, from convertible debentures is equity shares are born. Alva? So convertible debentures only is issued in June, andre. Of course, equity shares will also be converted from June only. You cannot take it from beginning of the year, April in the Tavakala. Did you understand that one point? Mother, daughter cannot exceed mother only, no, something like that. Okay. So yeah, let's go to the next standard. Want some more problems from accounting standard 20? No, we have done good problems only, no need. Now let's do some chill standards. So let's come to accounting standard 7. Construction contract. So construction contracts. Actually we have now 2 standards, accounting standard 7 and accounting standard 9. Both are what standards? No, these are revenue recognition standards. 7 is revenue recognition standard, 9 is revenue recognition. But 7 is specifically used for construction contracts. All other kinds of revenue will come under AS9. Construction contracts revenue will come under AS7. But both are revenue recognition standards only. Understood? Now let's come to AS7. Scope. Applied by contractors in accounting for construction contracts, of course, no doubt about it. First of all, what is a construction contract? We have to understand. A contract specifically negotiated for the construction of an asset or combination of an assets that are closely interrelated or interdependent in design, technology, function, purpose. They are telling construction contract can be a contract for construction of one asset or construction of multiple assets which are interdependent or interrelated. Construction contract can be construction contract for one asset or combination of assets that are interrelated or interdependent. Construction contract also includes any service contracts related to construction also. For example, architect, civil engineer, all these people are what? They are actually giving service. Their contract is service contract, but is it related to construction? Yes. So they can also be included in construction contract. Third, if you have any contracts for demolition, now sometimes what will happen before constructing a new building, you have to demolish the old. So you will be having contract for demolishing first and then you are constructing. Is that also included under construction contract? The demolition part? Yes. When I say construction contract, it's for construction of buildings also. It's It also includes the services related to construction, adu barabodu, architect to civil engineer. Then the demolition contract also comes under construction contract. These can be included. When I say construction contract, don't say the contract only for construction only will be covered under here. Okay. So when I say contracts, this construction contracts, there are two types: fixed price contract and cost plus contract. Fixed price contract is simple. Say suppose I'll take one example. I have gone to a person, he has to build me a building. We have decided, you build me a 4-floor building, I will give you 20 lakhs. Over. This is called what? Fixed price contract. Now no matter what happens in future, say suppose he has taken time of 2 years. No matter what happens in 2 years, how much will I pay him? 20 lakhs. Fixed price contract. You construct, I give you 20. But there is a risk in fixed price contract now. Over 2 years, what if inflation increases? What if cement price increases? What if brick price increases? All that problem is there. Those who don't want to take that risk, they will go for cost plus contract. Cost plus contract, you know, 2 people, that guy is constructing and building for me. He will tell, sir, whatever cost I will incur, no, that cost, whatever it is, plus you have to give me my profit margin of 20%. Actual cost, whatever I incur. Say suppose the contractor has actually incurred 30 lakhs. So you have to give me 30 lakhs plus my margin how much? 20%. 30 lakh plus 20%. 36 lakhs you have to give. This is called cost plus contract. Now what is happening here? Here the contractor does not have the risk of inflation. In case ಏನಾರು ಜಾಸ್ತಿ ಕಡಿಮೆ ಆಯಿತು ಅಂದರೆ, however this guy will give the cost, no. So no problem. Contractor does not have the risk of price increase or decrease because customer only will give the cost. Over and above will give the profit. So for me there is no risk of inflation, price changing, etc. Okay. Sometimes there is something called as escalation clauses in fixed price contract. What is escalation clause? If a fixed price is 4 floors, 20 lakhs. That is fixed price. If you put escalation clause in the contract, what you have to understand is, sir, today I have accepted for 20 lakhs, okay. But in 2 years if price increases, then you have to reimburse me for the inflation. And no point irute. Contractor would have put it in his agreement. That is called what? Escalation clause. Tomorrow if price increases, sir, I had quoted you 20 lakhs considering the price that was there 2 years before. What if the price has increased in 2 years? Then you have to reimburse me for the increase in price. That is called escalation clause. Okay. Now combining and segmenting construction contract. Basically what we'll understand here is, when there is multiple contracts, should you treat it as one contract only, or should you treat it as different contracts only? Did you understand the problem? Say suppose you have 4 different construction contracts. Should you treat these 4 different construction contracts as 4 different, or should you treat it all the 4 as one? What should you do? That is given under here. So let's understand. The group of contracts is treated as single construction. Even if you have 4-5 construction contracts, I will treat it as one contract only when, if it is negotiated as single package. Andre, say suppose I am taking a tender. In the government tender is that I have to build 5 roads. 5 kade main roads na build madbekanta ide. Okay. Now when I am going for negotiation only, the government is telling, sir, if you want to take up all 5. I know 5, it's 5 different construction contracts. But while we are negotiating, while we are talking about money, we are considering all the 5. Ant helidare. Then it will be treated as single contract. You are negotiating it for as one package. Government has told, if you want to take all the 5, or you cannot take part. 1 to 2 and all you cannot take. If you take, you have to take the construction of all the 5 roads. Constructions are so closely interrelated that they are effectively a single project with an overall profit margin. Now what happened now? Actually there are 5 roads alva. For me 1, 2, 3rd, 4th, 4 roads are profitable. 5th road actually is a loss to me. 5th road nan madange illa. But why did I take up? Because the first road is there, no. It is very near to my construction project where I do my normal construction. Alva. First road is very near. Since it is very near, I am making good profit there. In second contract is also very near. I am making good profit there. Third contract is also happening very near to my construction project, so I am making profit. Alva.
Now, since I'm making huge profits in this first 3 contracts, I'm ready to take 5th one. I'm ready to take the loss of 5th. So idea enandre, when I do all the contracts on an overall level, my profit will be certain percentage. In the first contracts I've made more money. In the later contracts I've made less money. Ultimately the gross margin will match off. So then they are telling it will be treated as single contract. That means you have accepted this 5th contract because you are viewing this overallly and not individual contract level. For example, 5th contract is actually loss, but why you will be doing it? Maybe because directly taking up 5th contract is a loss. But since you are doing all the 5 contracts together, you have economies of scale now. Because 4 contracts, 5 contracts ko vatte purchase madbodu. You can buy bricks, road, tar and all together, and you will get the effect of economies of scale. So it is interrelated, no? So can you separate 4 contracts in this 1 contract? No. Maybe I accepted because I have accepted all the 5 because in 4 I will get some benefit. That's why I accepted 5. They are interrelated. My decision is not separate for 5th one and 1, 2, 3, 4. Then you can say it's a same contract. Contracts are performed concurrently. And when you are building these roads, no, you are building these roads around same time only. Adukku 10 years gap illa. You are doing all the projects same time, all the 5 roads. Then if these are the situation, then you can treat it as 1 contract. When will you treat it as a separate contract? Say contract covers a number of assets and separate proposals were submitted. When you go for government, I thought government has told, sir, 5 roads are there. Whichever you want, you can take. You can submit your proposal separately. In that case, it will be treated as separate. If the government has told, no, if you take up, you have to take up all the 5. 1 and all I will not give. And then it becomes combined contract. If you can submit the proposal individually, it's a separate contract. Then there is a separate negotiation. When you are talking to the government, you are separately doing negotiation for 4th contract, 2nd contract, 3rd contract. If the negotiation is happening separately, it will be treated as separate. If the government tells, no, take all the 5 together, and the amount that is treated, or quote for road number 1 40 lakhs, for road number 2 30 lakhs, road number 3 20 lakhs. If they have quoted like this, then it is separate contract. If they have quoted for all 5 roads 1 crore, is it separate contract, combined contract? Combined contract. So quoting elladukku seri onde number is it's combined. For each and every proposal, if you have separate numbers, then it is separate contract. Cost and revenues of each asset can be of each 5 roads. If you are able to find out the cost that you are incurring for each road and the revenue that you are getting from each project, if you are able to bifurcate it properly, then it can be treated as separate contract. If you are not able to bifurcate properly, it will be treated as combined contract. And even if there are 5 contracts, it will be treated as 1 contract. Okay. Now, 2 things that you have to focus on is, there are 3 things in A7. Contract revenue, contract costs. Contract costs will go to P&L as expense and contract revenue will go to P&L as income. But the problem is it is not that simple. No. Generally construction contracts will be for a period more than 1 year. So how to do it? That is what we'll learn. So before going to that, let's understand what is contract revenue. You only tell me what will be contract revenue. Whatever money that I have agreed in the contract, 20 lakhs for 4 floors, that 20 lakhs is the contract revenue. This contract revenue includes what all? Variation in contract work, claims and incentive payments. To the extent it is probable that they will result in revenue can be reliably measured. 20 lakh rupees is there. Will I consider it as contract revenue? Yes. Then you are making some claims. The party is, me as a contractor, I am making some claims from my customer. Sir, this is extra. Please give me money. Sir, they have done this extra. Give me extra money. This is what? Claim. If you think that whenever you make the claim, he'll give you the money, then add that claims also. Sir, in 20 lakhs, I was not supposed to do this, sir, but I have done it for you. Give me. That claim also can be added in contract revenue. Incentive payments, they have told, if you finish construction within 3 months, I'll give you extra 20,000. Then that also can be added to contract revenue, provided if it is probable that they will result in revenue. Andre, are you sure that you will finish the construction within 3 months? Yes. Then only you can add it to contract revenue, or else you cannot. Okay. What is variations? Variations andre, we first discussed 4 floors, but we ended up constructing 5 floors. Now since I've constructed extra floor, of course I will ask extra money. Should I consider that extra money as contract revenue? Yes, provided your customer, he should approve that. If you are sure that he will approve, you 5th floor katibididira. Are you sure that your customer will give that money? Yes. If it is yes, include it in the contract revenue. Can you measure the amount that you are adding in the contract revenue? Yes. If you are able to reliably measure it, then include that variation amount also in the contract revenue. These 2 conditions should be satisfied. It should be probable that he will give. Probable andre more than 90% chances should be there that he will give. And second, that amount whatever you are adding to contract revenue should be measured reliably. So what all will come in contract costs? All that you'll use for construction. What all you'll use? Direct raw materials, labor, wages, all that will come. See, depreciation of plant. Oh, depreciation of plant is also considered as cost. Because you will use plant and equipment for construction activity, no? Iga, you are a construction company. For a particular project, you are using your plant and machinery to do the construction, JCB and other things. What is the cost of that JCB? Your depreciation now in your P&L, what is the cost for your plant and machinery? Depreciation. So you can add depreciation also in the construction contract cost. Then any design and technical fees, architecture, civil, everything, all the related construction costs can be considered. Estimated costs of rectification or guarantee work. Okay, what is this rectification or guarantee work? Maybe you are building, but whatever you are building is not in accordance with what the client wants. So what will you do? Rectify. To rectify, you will again demolish everything and you will build it the way customer wants. So that is called what? Cost of rectification. That also can be added to the contract cost. Basically all the costs that you are incurring for the purpose of construction. Allocable overheads. Overheads and first of all, it is indirect expenses. So indirect expenses is not direct. But if you are able to allocate it to the particular construction projects, you have taken some insurance. Now insurance is what? Indirect expense. Can you allocate it to this particular project? Yes. If it is yes, you can add that also to the construction cost. Admin, rent, overheads. My question is, can you allocate it to a particular project? Yes. Then you can add that also as construction cost. Then any other costs specifically chargeable to customer under the contract terms. Now in contract, whatever cost you are incurring, if the customer is ready to pay, all that cost that you have incurred specifically for the construction contract can be treated. Just take it like that. What all you should not take is what you should consider. General admin costs. Sir, just now you told you can take admin A. Admin guy related to this particular project. If you have a reception guy, if you have an admin guy, for the purpose of this construction project, that you can consider as contract cost. But can general admin guy come? You have one admin guy who is looking over all the projects. Admin idane. On all projects nodkodadane. Can you allocate it him to one project? No. That admin will not come. But if you have an admin guy who is taking over this construction contract, then can that come as contract cost? Yes. Are we clear there? Selling cost will not come. Research and development cost, of course it will not come. Depreciation of idle plant. If you have any plant which you have not used only in any contract, can you allocate that depreciation as contract cost? No. Of course not. No, it's idle. If you have used any plant and machinery for the purpose of construction construction, that you can allocate. But if there is any idle plant, that depreciation, idle under that you have not used only, that you cannot allocate it to the contract cost. Okay. Okay. Now how to recognize construction contract? For that, it is very important for us to find out percentage of completion. Why, sir? Because I will tell you how we will record the contract revenue. How we will record contract revenue is, contract revenue to be recognized for first year. Say suppose we have a construction contract which has a period of 3 years. How will you record first year contract revenue? Take total contract revenue. Take total contract revenue multiply it by percentage of completion. Now your total contract revenue is 20 lakhs. You have finished 30% of the building. So 20 lakh into 30%. How much revenue can I recognize as a contractor? 6 lakhs. That's why percentage of completion is very important to us. Contract revenue, we know how to take it. What all will come in contract revenue? Fixed price, variation, claims, all this can, incentives, all this can be added. Now, for this percentage of completion, what they will give in question, in real life what will happen? To find out percentage of completion, we have 3 methods. One is proportion of costs. This is what we will use for our problems also. We'll come back to that later. Second one is surveys of work performed. We'll call one valuer only. He will come and he will assess out of the total building how much is over. And he will give us one report. Sir, 50% of the completion is, of the construction is over. Then I will directly use that 50% for recognizing the contract revenue. That is your survey method. The external guy will come, he will tell you the percentage. Third one is physical proportion. Physical proportion, you don't, in some cases, no, you don't need someone to come and tell. Directly you can, understand. Say suppose the contract is for 4 buildings and 2 buildings are completed. Say suppose 4 equal buildings, 1,000 square feet. 4,000 square feet he has to build. Out of that, 2 buildings he has completed completely. So how much is over? 2,000 square feet is over. Now how will you recognize? Out of, now entire contract is for 4,000 square feet. Out of that he is done with 2,000 square feet. That means 50% of the revenue you can recognize. Understand? Contract is for how many square feet? 4,000. 2 building is over and that 2,000 square feet construction is over. How much revenue I can recognize? For 2,000. So entire contract revenue into 2,000 divided by 4,000. That much contract revenue I can recognize. Is it value or beka? Illa, it is very similar. No, what are you seeing to find out? You are seeing the physical completion of the asset. 4 building al 2 building agide. So I will recognize 50% of the revenue. If you are not able to do this individually, then you will take the work of surveyors. They will come, they will do the analysis. See, when the projects are really big, like metro and all, you cannot just do it like that, like how I did, 2,000 by 4,000. Avaga surveyors beku. But if it is very simple, then you can only do it now. These are the 2 other methods, but for examination purpose and even in real life, the method that we use is this. We'll use the costs to find out how much of the construction is completed. What will we do? Percentage of completion is equal to total costs incurred till now divided by total estimated costs for the contract. Understood? So what we'll do is cost that we have incurred till now divided by total cost that is required for the contract. Now simply, the total cost that is required for me to complete the contract is 10 lakhs. Out of that, till today, how much I have incurred? 6 lakhs. Tell me how much of the work is completed. 10 lakhs total agಬೇಕಾಗಿರೋದು ಇಲ್ಲಿವರೆಗೂ 6 ಲಕ್ಷ ಖರ್ಚು ಮಾಡಿದ್ದೀನಿ. 60% of it is completed. No, that is how we are calculating. The total cost incurred till now divided by the total cost required for the project. 6 lakh by 10 lakh. 60% of the work is completed. All of you clear? Then once I get the percentage, I'll multiply with total contract revenue. I'll understand how much revenue should go to P&L as income. Then how much cost will go to P&L? Are we supposed to do one big math? See, there are 2 points. Revenue, which will come in income side. Cost will come in expense. How much will go to revenue? We understood. Total contract revenue into percentage of completion. Simple. How much will go to expense? Whatever cost you have incurred till now, that will go to expense. How much you have incurred? 6 lakhs, no? Directly 6 lakhs will go to P&L. That's all. There you have found out the profit. All of you clear? And one more thing what you have to understand with respect to this is, they have told, sometimes most of the times, construction contracts is for more than 1 year only. Generally it will be for 3 years, 5 years, 10 years. One point what they told was, over 10 years we will recognize the income, alva. So what we'll do, first year we'll find out percentage of completion, book the revenue. Second year, find out percentage of completion, book the revenue. Third year, fourth year, fifth year, like till 10th year we'll keep doing this, no doubt. Every year we'll see the percentage of completion, we'll book that much revenue, that much, whatever cost incurred in that year, that will go to P&L. Every year you're doing this for how many years? For the construction period, that is 10 years. What they are telling is, you will do this, do, parvagilla. But whenever you are starting the contract, alva, first to do one analysis. Anta. What is that analysis? See whether the overall contract is profitable or not. Anta they told. First only. For example, you are a contractor, you are building 4 floors building, and the revenue that you are getting is 10 crores. Aita. And the cost that you are incurring over 10 years for this construction is 11 crores. What is the construction period? 10 years. Aita. You will book the revenue over 10 years. You will book the cost over 10 years. But now only did you do the analysis. You will get revenue of how much? 10 crores. But your cost that you will be incurring is 11. Now one question comes, sir, why would anyone do that? Of course they will not do. But assume the situation is that. Then what they are telling? No. How much is my loss? Will you book this 1 crore loss over the period? No, no, no. They are telling book this 1 crore loss today. Concept of conservatism. Correct? No. Future losses book it today only. Future profit even book madbedi. But future losses book it today. So they are telling first to do the analysis. What is step 1? See the overall profitability. If it is profitable, continue normally. If you have a loss, then book that entire loss in first year only. All of you understood? Then you continue your percentage of completion. Aita, cost by total cost. That much you book. First year, this much would be booked. Understood? We'll directly go for some question. Oh, no RTP question from AS7. Okay, let's go to PYP. Yeah, we did government grants, no? We solved, and then we have solved from RTP. There are also some PYP questions, which is okay. Yeah, but it's a good question, man. It's asked in examination. It is AS12, AS16 and AS26. Let's try to solve this question, okay? Just see, we have already discussed everything. It's a question which is already asked in September 25. On 3rd April 2022, ZYX Limited received a state government grant of 150 lakhs for setting up a manufacturing unit in a notified backward area. A bank loan of 50 lakhs was also obtained on 1st April 2024. ZYX Limited utilized the grant and loan as under. So, grant to sikkide and they have also taken loan. See, for construction of factory building, from grant they have utilized 60 lakhs and from loan they have utilized 30. Purchase of machinery, 40 they have used from grant, 20 from loan. Advance for purchases of loading vehicle. To purchase some vehicle you have given advance. From grant you have given 30. And remaining 20 from grant you have used it for working capital. Aito. Construction of factory building and installation of machinery was completed on 31/3/2025. Delivery of loading was not received. Loading vehicle, a vehicle idiyala, still we have not yet received. Total interest charged by the bank for the year ending 30. When did we take the loan? 1/4/2024. 31/3/25 vargu. How much interest we are paying? 50. The state government grant was credited to the deferred grant account. Out of the grant, 30 lakhs was used for purchase of machinery, which was refunded. So, out of grant, the 30 lakhs which you had used for purchase of machinery, that you have refunded due to non-compliance with certain government conditions. The estimated life of the machinery is 4 years. Now, during year 24-25, the company also received a subsidy of 8 lakhs from the central government for setting up a unit in notified backward area. This subsidy is the nature of promoter's contribution. That means what will you do? You transfer it to capital reserve. During the year 24-25, the company incurred 18 lakhs on publicity and research for a new consumer product, which was marketed in the same year but proved to be a failure. 18 lakhs now publicity ಮತ್ತೆ research ಮಾಡಕ್ಕೆ. What? For a new product. For research we have spent. Research phase. Based on the information given in the above case scenario, answer the following questions. I know answer is there only, but try to answer. What is the amount of borrowing cost to be capitalized? Oh, A 16. How much you have to? How much is the total interest? 5 lakh? So entire 5,50,000 I will capitalize. No. You can capitalize only that interest which is used for qualifying asset. So let's see. See, out of loan, 30 lakhs I have used for construction and 20 I have used for purchase of machinery. Tell me, out of the two, which is qualifying asset? Construction is qualifying asset. Purchase of machinery, immediately you will purchase. No. Will it take substantial period of time? No. That means out of 5,50,000 into 30 by 50 is what I can capitalize. So it comes to 3 lakh. Remaining 2,20,000 I cannot capitalize. That will go to P&L. All of you understood? So first one is 3,30,000. Next, in March, it's an actual exam question. In March 2025, what will be the amount of deferred grant debited when the grant received 30 lakhs is refunded? Understood the question? When you refund the government grant, and if whenever you have received, and if you have put that grant to DGG, while refunding you have to debit DGG. That's what we learned. They are telling how much. See, the state government grant was credited to DGG. Out of the grant, 30 lakhs which was used for purchase of the machinery was refunded due to non-compliance with certain conditions. Now the estimated life of machinery is 4 years. So they're talking about this. Chappandi, when did we, so my question is, 30 lakhs is right now in DGG, no? Will that be, till the day you are refunding the amount, will 30 lakhs only be there? Why not? From DGG would have transferred to P&L. When did you put it to DGG? Somewhere around? On 3rd April 2022, I have put it to DGG. Refund yaವಾಗ ಆಗ್ತಾ ಇದೆ? The state were refunded in March 25. Andre how many years has elapsed? Andre 23, 24, 25. Alva? For 3 years, we would have transferred from DGG to P&L in what ratio? In depreciation ratio. So that we have to reduce, alva? So we have to reduce that. We have to start the calculation. Initially, one point you have forgotten. That's what we were supposed to do. You have thought correctly. But one line you have to consider. Delivery of loading vehicle was not received till 31st March 2025. Can you see? Machinery, see, installation of machinery was completed on 31/3/25. But delivery of loading vehicle was not yet received. And then March 25 vargu delivery ne receive madilla neevu loading vehicle. Then depreciation would have started. If depreciation is not started, do you think you would have transferred anything from DGG to P&L? Did you understand the point? Depreciation idre, in that ratio would have transferred it to P&L. But 3 ವರ್ಷ ತನಕ ನನಗೆ ಅಸೆಟ್ಟೇ ಬಂದಿಲ್ಲ. ಅಸೆಟ್ಟೇ ಬಂದಿಲ್ಲ ಅಂದ್ರೆ no depreciation. No depreciation and nothing is transferred to P&L. That means how much balance will be there in DGG? Still 30 lakhs. That means how much will you debit? ಎಲ್ಲರೂ ಸ್ಟೈಲ್ ಆಗಿ ಡಿಪ್ರಿಸಿಯೇಷನ್ ನ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಿ 22.5 ಅಂತ ಹೊಡೆದಿರೋರು. ಗುಡ್ ಕ್ವೆಶ್ಚನ್. ಏನು error, I guess error. I think it's an error. Okay. 30 lakhs it is. This is, I think, error. Illenide D9. Okay. Okay. Question number 7. Now as per AS 26, intangible assets, what is the correct accounting treatment for that publicity and new consumer product research? Why? Whenever we are only constructing intangible asset, whatever is incurred in research phase, that will go to P&L. Here we are still researching for a new consumer product, so entirely charged to, I know the AS15, that you leave. Okay. We were doing what? We were finding AS7, alva? Oh, only one question. Okay, it's okay, we will see. V Limited, this was asked in Jan 2026. V Limited entered into a contract to construct a hostel building for MR College at an agreed price of 224 lakhs on 1st October 2024. We have entered into contract on 1st October. The expected completion time is 18 months. V Limited incurred a cost of 60 lakhs up to 31st March 2025. Prudent estimate of the additional cost for completion was 180 lakhs. As at 31st March 2025, V Limited has billed MR College 84 lakhs as per agreement. Based on the information given above, try to answer this question number 6. What should be the amount that is to be recognized and what is the total expense? And the contract revenue, contract cost. For which year? For 31st March 2025. What is the contract revenue and what is the contract cost is what they are asking. Okay. So whenever construction contracts come, so which year we are talking about? 31st March 25. When did we take up the contract? 1st October. This is when we took up the contract. So now I know what you'll do. First thing what we'll do, we'll try to find out percentage of completion. But before that, one thing should come in your mind. First test. Overall profitability you have to see. What is overall profitability? ಇದರಿಂದ ಎಷ್ಟು ಬರ್ತದೆ ನಿಮಗೆ? See, the agreed price is 224 lakhs. That is the revenue you are getting. How much cost you are incurring? See, 60 is what they have incurred up to 31st March. And the prudent estimate of additional cost that they will incur is 180. And the 60 plus 180. Total cost will incur is? Ayyo. That means what? You have a loss of? So what you have to do about this? Overall contract itself has a loss. That means that should be booked in year 1. So 16 should be booked as loss. Keep this in mind. Now you start doing your percentage of completion. How much is your percentage of completion? What is the cost that you have incurred till now? 60. But what is the total cost required? 60 plus. So it comes to 60 by. That means 25% is completed. So what is your total revenue? So 224 into 25%. So how much contract revenue you can recognize? 224 into 25%. 56 lakhs is the contract revenue that you will recognize. How much is the cost? You will recognize this year. Cost is whatever you have incurred. What you have incurred? 60. I'll tell you. Now 60 is what I have incurred. So take 60 lakhs. What is the loss that you are getting in first year? Hey, wait. 56 minus 60 you did. 56 will go to P&L as income. 60 will normally go to P&L as expense. But what is the loss that you got? Is that correct? No. As per my step 1, what did I realize? The overall contract loss was 16 lakhs and entire 16 lakhs should be booked as loss in the first year only. Out of that, how much is already booked? 4. That means I have to further book a 11 lakh expense. 16 and 12 lakh. So I'll increase it by 12. Now then it becomes 56 minus 72. How much it becomes? 16 lakhs you are booking in year 1 only, as I told. So how much should go to revenue? 56. How much should go to costs 72. Did you understand how 72 it became? Because in the first year, the total loss that should be booked is 16. Out of that, you were able to book only 4. ಅಂದರೆ ಇನ್ನೂ 11 ಬುಕ್ ಮಾಡಬೇಕು ಅಲ್ಲ 11 ಅಲ್ಲ ಎಷ್ಟು 12 ಇನ್ನೂ 12 ಬುಕ್ ಮಾಡಬೇಕು. ಸೊ ಐವ್ ಇನ್ಕ್ರೀಸ್ ದ ಕಾಸ್ಟ್ ಬೈ 12 ಬಿಕಾಸ್ ಆಫ್ AS7. ಸೊ ದೇರ್ ಫಾರ್ ಆನ್ಸರ್ ಇಸ್ revenue 56 lakhs and expense 76. How 76? Uh, 240, 224. Overall is 16. No? But 60 is 16 madangilla because by doing 56 and 60 you already have a loss of 4. Aita. So to make it 16, I have to increase cost by only 12. Guys, it should be 72, okay? It cannot be 76. Okay, it should have been 72 lakhs. Okay, it's option C. You cannot directly add 16. You have to see first what is the current year loss even before applying the first step. First step apply ಮಾಡಿದ್ರೆ loss already ಎಷ್ಟಿತ್ತು 56 revenue, 60 was the actual cost incurred. You already had the loss of 4. So you have to increase your expenses only by 12. So it is 60 plus 12. Okay, it's wrong 100%. It should be 72 lakhs. Okay, answer is option C. Anyways, ಅಲ್ಲಿ ಬೇರೆ ಯಾವುದೋ ಇದೆ ಇಲ್ಲ, that is different. It should have been 72. Okay, this is not relevant. This is another question maybe they have not given. So understood, all of you, how we did it? Do it like this only. Directly don't increase your cost by loss. First see how much is the loss. Then only remaining only have to take. Okay, we have done it in various other problems also before. All of you clear? So take the total revenue multiplied by percentage of completion. Okay, we'll go to next standard, that is AS9. So see this question, okay, illustration 6. Okay, a firm of contractors obtained a contract for construction of bridges across the river Revati. Oh, river Revati. The following details are available in the records kept for the year ended 31st March. Now you should tell me how to do this. Total contract price is 1000, which is nothing but our contract revenue. Work certified was the cost incurred 500. Work yet not certified for the cost incurred. Ivella biscuit. What is the cost that we have incurred? 500 plus 105. And the 500 ge certification kottidare. 105 ge maybe surveyors in certification kottilla. But are we using surveyors method? No, we are using cost method to find out stage of completion. So what is my ultimate cost that I have incurred to complete the project? 500 plus 105, 605. Estimated further cost required for completion is 495. Okay, progress payment will come back later. The firm seeks your advice and assistance in the presentation of accounts keeping. Okay, now basically they are asking how much revenue you have to recognize in this year. Step 1, Step 1 is what? Overall. So let's see overall. What is the overall revenue that you are getting? 1000. What is the overall cost you are incurring? 605 is what is already incurred, 495 is what you will incur. So 605 plus 495 andre 1100. Is there overall loss? Yes. How much is the overall loss? 100. That means in the first year I should book loss of 100. Keep that in mind. Now we'll normally do our calculation. What will we do? Find out stage of completion. How much is stage of completion? Cost incurred divided by total cost. Total cost we already know. It is 1100. Aita? Cost incurred till date is, so 605 divided by 1100. How much it is? 55%. So that is the stage of completion. So how much contract revenue I have to book this year? Take the total revenue multiplied by 55%. What is the total revenue? 1000 lakhs into 55%. 550 is the revenue. Aita? How much is the cost that should go? The cost is, how much is the cost that should go? Actual cost. What is the actual cost that you have incurred? 605. Now, how much is your revenue? 50. Revenue is Varshith 505. Your expense? 605. How much is the loss? 100, no? Oh, 550. 550 minus 605. How much is the loss? 55 is the loss. But, as per my analysis, how much loss I was supposed to book? 100. Out of that, how much is booked? Further, I have to book loss of, so my expense becomes, so it becomes 605. Existing expense is 605. To this you add 45 is the deficit. So 605 plus 45. So the expense that will go is 650 and revenue that is coming is 550. So your overall loss that is coming is 100. So how much expense went to P&L? Not 605, it's 605 plus 45. Because 100 only 55 is already recognized. Did you understand all of it? Similar only we'll discuss. See this question. So again, check what we have learnt is correct or not. 1st December, Vishwakarma Construction, fast we'll do it, undertook a contract to construct a building of 85 lakhs. So contract revenue is to 85. On 31st March, the company found that it had already spent 64 lakh 99. Prudent estimate of additional cost is 32.1. What amount should be recognized? Step 1. Do the overall thing. What is overall? Overall revenue is 85 lakhs. Overall cost required is 6499 plus 3201. Andre overall level loss is yes to. The overall level loss is 12 lakhs. That means 12 lakhs should be booked in year 1 only. Keep that in mind. Now stage of completion. What is stage of completion? Till now I have incurred 6499 divided by total is 97. So 6499 by 97. So your stage of completion is 97%. So how much revenue will you recognize? Total revenue into 67%. How much is total revenue? 85 lakhs into 67%. And the revenue comes to 56 lakh 95. Now, how much is the cost that will go? 64 lakh 99. Just check how much loss or profit is there. Revenue in the first year, contract that your revenue that you are recognizing is 5695 minus your cost is 6499. ಎಷ್ಟು loss ಬಂತು? 20 lakh 1000. How much is the loss that I should book in the current year? 12 lakh. But first year loss we are getting as? Hey, Noda. How much? The loss, what I am trying is, what is the first year revenue? Hey, how much you are recognizing da? 85 lakhs into 67%. ಎಷ್ಟು ಬಂತು? 56 lakh 95. Minus what is the cost we have incurred? Minus 6499. How much is 8 lakh 4. How much is the loss that I have to book in the first year? 12 lakhs. Out of that, how much is already booked? 8 lakh 4. Remaining how much I have to book? See, amount of provision required is how much? 3 lakh 96. Totally it should become 12. Okay, don't, like in that MCQ they have done, no, don't do it like that. First you see how much loss is already getting booked in first year. Then you take the remaining. See how much provision for loss? Only 396, not the entire 12. You got this small point, no? What I am trying to understand. So done. We are done with AS7. Let's go to AS. That expense total now comes to how much? 12 only. My thing is the provision for loss plus the expenses which has gone together should be 12 lakhs. And then how did we get that 12 lakhs? Overall level. That is my thing. If you see, where did it go? See, your actual loss is how much in the first year? 8 lakh. See the delta. Your actual loss is how much in the first year? 8 lakh 4. But I was supposed to show a loss of 12. But right now already in the first year we have a loss of 8 lakh 4. So I have to increase my cost by how much? 3 lakh 96 for that to show a loss of 12 lakhs. Because overall contract is at a loss. Did you get it? Together it should come to 12. So we'll come to AS9, AS9, which talks about revenue recognition. AS7 talks about revenue only, but only for construction contracts. The other things will come here. First of all, what is revenue? Revenue is the gross inflow of cash or receivables in case of credit sales or other consideration arising from sale of goods or rendering of services, or it can be any other form, interest or royalty, dividend. What is interest? If you have given out some money, if you have lent money to someone, then that guy will give you interest. Royalty is what? Maybe I am using your patent. Since I am using your patent, on every unit that I am manufacturing, I will have to give you a royalty. Mining royalty barutte. That's why if I am using your intangible asset, since you are the reason for the idea, for every unit that I produce, I will give you royalty. Now if you see some interviews and all, one guy was telling, sir, I had done a movie 10 years back, but I still get a royalty for doing in that movie whenever that movie is played anywhere. So what is it? Royalty is something that is also a form of income. Then we have dividends. Dividends, if you are holder of equity shares or preference shares, you will get dividend. So how to recognize these three things? Now revenue andre, whatever money you are getting normally from goods, services, or it can be interest, dividend or royalty. Ishtide namge income andre. How to recognize this revenue is what we are focusing on. Okay. So first of all, they are telling, when I say revenue, what all is not coming to my standard anta. So let's see. If you sell any non-current asset and if you get any profit on sale of non-current asset, profit on sale of PPE, all that will come here. No, it will come there only. Profit or loss on sale of investments, non-current investments, will it come here? No, we have separate standard only called as AS13. That will not come. Gains from discharge of an obligation. You had a liability of 10 lakhs, but you ended up paying only 9 lakhs. You got a benefit of 1. Am I talking about those gains here? No. AS7 is talking about only 5 items. Sale of goods, sale of services, dividend, royalty, interest. Ivella baralla. Okay. Unrealized gains definitely will not come. For example, restatement of carrying amount of an obligation. Holding of non-current assets. For example, your revaluation will do no for fixed assets. Technically that is a gain. Will AS9 talk about that gain? No. We have separate standard. Okay. Unrealized and artha aita. What is realized, unrealized? I sold goods to you. I will book a profit of 5 lakhs. Is this the realized gain? Yes, because I have transferred goods. You will give me money. It's a realized gain. I had my PPE. It was at 1 lakh. I simply increased it by 1 crore because fair value was 1 crore. Is that realized? No. Did someone come and say, sir, we will give you 99 lakhs. Illa. It is not realized. I only inflated. So all those unrealized gains or losses is not coming to the ambit of AS9. Okay. So any forex loss and all, we have a separate standard for forex, which is AS11. We are not talking about that also in AS9. So let's come to sale of goods. Only thing we are discussing is goods, service, interest, royalty, dividend. So let's come to goods. When will you recognize, sale of goods as income in your books? The seller has transferred to the buyer the property in goods. Property andre ownership. You should have transferred ownership in goods, and all significant risk and reward of that goods also should be transferred to the buyer. Then only you can recognize that income. Two things. What? Ownership should be transferred, and risk and reward in such goods should also be transferred to the buyer. Then only you can recognize the revenue. Second condition, sir. No significant uncertainty exists regarding the amount of consideration. Now I transferred the risk and reward. I transferred the ownership. But now I am feeling that Shreyank might not give me money. Can I recognize revenue? No. Second condition also should be satisfied. Only if I am positive that he will give me money, I can recognize revenue. If I feel there is some uncertainty, there are chances he will not give me money, then I cannot recognize revenue. What are the two conditions? Transfer ownership, transfer risk and reward. Second, there should not be any uncertainty with respect to collection of the money. Then only you can recognize the income from sale of goods. Okay. Both the conditions should be satisfied, it seems. Next, rendering of services. If you are rendering services, how to recognize income? We have two. One is proportionate completion, one is completed service contract method. Two methods we have. Sir, out of two methods we can use any method? No, it depends on what is the service. Now say suppose your service is involving very less acts or one act. For example, I will come to your house, I will give one service, maybe installation of a table. Ashte. This is my service. How many things I am giving in a service? One service. What is that? Installation of table. If the number of acts that is there, within a service is very less or it is one, then I will use completed service contract. If I have many services involved within one service contract, then I will use proportionate completion method. Proportionate completion method is very similar to the thing that we learn in AS7, percentage of completion. Now maybe the service contract is for 10 lakhs. Will I recognize entire 10 lakhs in the first year? No. If I have finished 50% of the contract, then I will recognize 50% as revenue. Understood? Completed service when I use, when the number of acts is same. You can tell me. Though it is not applicable here, just as an example you take. Construction of building is the service. Will it come to proportionate completion or completed service? First of all, it will not come to AS9 only. It will go to AS7. If at all it was coming to AS9, where you would have put it? Proportionate completion, because it involves many activities. Construction, laying, architecture, civil engineering, many things are there. Whenever there are many acts, you are supposed to use completion method. Say suppose in your contract service only one act is there. Architect service, chartered accountant service, lawyer service. What is happening here? Only one act is there. Which method will you use? Completed. That means you will recognize the revenue only when the service is completed. Maybe I am giving you audit services. When will I recognize this revenue? Once I sign your balance sheet and I give you audit report. No, that is when I can recognize the revenue. So understood? It is not an option. If you have one single activity, go for completed. If you have various activities, go for proportionate completion method. Same thing, same point. Revenue from sale of goods for consideration and service transactions should be recognized only when there is no significant uncertainty exists regarding the amount of collection. Same thing, goods salitala, the same condition. If Shreyank, if you think he will give, then only recognize the revenue. You did all the proportionate completion method and all, 70% came, but you think that customer will not give money only. Then they are telling don't record only. Okay. Let's come to interest. Now goods over, service over. Let's come to interest. How will you recognize interest? We already know. We recognize interest on accrual basis. I have lent some money to some people. When did I give it? I gave it on 1st April. On 31st March, for how many months I have to book interest? 1st April to 31st March. 12 months I will book. How will I calculate? 10 lakhs is the loan, 10% is the interest. So 10 lakh into 10% into 12 by 12. Sir, you have given loan in 30th June. then I will calculate only for 6 months. Sir, you gave it in January, then I'll calculate only for 3. Normal, accrual basis. All of you understood? Royalty, sorry, my bad. Interest and what did we do? Accrual is also correct. But for interest, what did we do? Time basis. If the money is outstanding for 12 months, I will calculate for 12. If money is outstanding for 6 months, I'll calculate for 6. Royalty, accrual basis. Andre, royalty is again, why am I giving you royalty? Because you have given me my technology. Okay. Now I have agreed. Every month I will give you 2,000, or for every unit that I produce, I will give you 2 rupees. Okay. Now in January, I have produced 5,000 units. Aita, how much I should give you? I have agreed that I will give you 2 rupees for every unit produced. In January, I have produced 5,000 units. 5,000 into 2, 10,000. So once the January is over, once you come to know how much I have produced, immediately you can book how much income? 10,000 rupees as income in January month. So you have to see a total units produced in 1 year into 2 rupees. That much income. Normally on an accrual. Normal, how you will book an income on accrual basis. What is accrual basis? Don't wait until he gives. When are you eligible for this royalty? The moment I produce, you are eligible. Will you wait until he gives the money? No, you can record it the moment you have earned it. When did you earn it? The moment I produced it. You can book it. Receivable anta torskond book ಮಾಡಿ. Next we have dividends. When can you recognize dividend as an income? Only when the company has declared the dividend in the AGM. Management proposed the dividend. Will you recognize? Director proposed madade saldu. It should be accepted in AGM also. Then only the dividend can be given. So when will you recognize? Whenever the right to receive the dividend is established. When is right to receive the dividend established? Declaration alla, proposal alla. Declaration in AGM only. So you can recognize the dividend only when it is declared in AGM. Just only if it is proposed by board of directors, you cannot recognize it as dividend income. Then last point. See, 1 page. Last point. Now one question I will only ask. You want to recognize the income now. At the time of recognizing the income, you have uncertainty with respect to whether he will give the money or not. What will you do? Don't recognize it at all. Very good. Second case. Now you recognize the revenue, everything you, because while recognizing you did not have any uncertainty, you recognized. Later the uncertainty is coming. What will you do? Reverse, whatever you had booked earlier, will you reverse it? No. What they are telling is don't reverse. Separately book a provision. Aita, provision for bad debts anta separate aಗಿ ತೋರಿಸಿ. Don't reverse the revenue. While booking only, if you know, don't book only. Aita. By mistake alla. While booking, there was no uncertainty of booked it, but later uncertainty came. Then no need to reverse. Separately book the provision. All of you understood? So these are the things you should know for AS 9. AS 9. So some previous year question papers. Hey, some more things are there, man. It's not there here. Wait a second. Some more things we have to discuss in AS9. Simple. First, delivery is delayed at buyer's request and buyer takes title and accepts billing. So what has happened is, now there is A and there is B. A sold goods to B. But B, what he did was, B told A, I will not take the delivery now. Let the goods be in your premises only. Now is the goods transferred? No. What did we understand about sale of goods? When to recognize? Only when the ownership is transferred and when the risk and reward is transferred, you can recognize the revenue. Here what happened? The customer has done the seller has done the billing and everything done. But customer has not yet taken the delivery. Customer only has told, sir, please keep it here only. Later I will take the delivery. Now question is, can seller recognize the revenue? Bill ಎಲ್ಲ ಆಗಿದೆ, ಇನ್ನೇನು ಕಸ್ಟಮರ್ ತಗೊಂಡು ಹೋಗಬೇಕಾಗಿತ್ತು, but customer told, no sir, keep it here only, later I will collect. Can we recognize the revenue? Technically we can recognize the revenue only if these 3 conditions are satisfied, or else you cannot recognize. What are the 3 conditions? The goods must be specifically identified, andre in that go down where buyer has asked us to keep, alva, that should be separately kept. Idu Shreyan's goods anta they should have separately kept it. Second condition, delivery is delayed at buyer's request. Who told me to delay? Buyer. Did the seller propose it? No. Buyer. Third condition, the goods are ready to be delivered. Now, if he calls now, you should be able to deliver it. Ayyo sir, idu naale sir innobbarge yargo kotbididini. I will do it tomorrow. Angella andre you cannot recognize the revenue. If he calls you now, you should be able to send it to his premises. You cannot say, yes sir, I have given it to others, I'll arrange for you tomorrow. Allah. If these three conditions are satisfied, then even if the goods are there in your godown only, you can recognize the revenue. What are the three conditions? Goods should be separately identified. It should be ready for delivery. And the delay should be asked by buyer. He should have asked for the delay. In these three cases, even if it is in your premises only, you can recognize the revenue. Okay? Sale on approval basis. I hope you know what is sale on approval. Correct, no? A would have sent goods to B. And he would have given time to B, saying that, A, out of this 10 goods that I have sent you, if you like anything, you can keep it. Then only I will bill. I will give you 3 months time. In this 3 months time, you can use it if you want and tell me whether you like it or not. If you like it, keep it. If you don't like it, return it back. This is called what? Sale on approval. So when should I recognize revenue in this case? They are telling, once the goods are sent to him, will I bill it? Will I recognize revenue? No. He has approved. Now, yeah. So you have to recognize revenue once the goods are approved by the buyer. Sir, that guy did not approve only, sir. Then how much time he had given? 3 months. The 3 months got elapsed? Yes. If it got elapsed, book it. Sir, we had not decided on the time only, sir. Then if the reasonable time has elapsed, then you can book it. So when will you recognize income on approval basis? Is it approved? Book it. Sir, he did not approve only. Then 3 months you gave no. That is elapsed? Yes, sir. Then you can book it. The 3 months is also not elapsed. Then you cannot book. Sir, we did not decide on time only. Then reasonable time has elapsed? Yes, sir. Then you can recognize the revenue. Goods sold subject to inspection or installation. I have sold, A has sold some goods to B, and B has told, sir, I will give you money only after the, and it is some kind of goods which requires installation. Now lift, gift, all these are there. No, this requires what? Installation. Now sometimes, wherever I purchase lift and all, no, they only take care of installation. So I will tell, sir, you come and I will buy it. Now lift is a goods. I will tell him, sir, once the installation is correct, sir, I will give you the money. Or I will say, sir, once whatever goods you have sent, sir, I will check it. Once my inspection is okay, I will give you the money. And if the goods which you are buying is subject to installation or inspection, what we have to do? So they are telling, in case the installation is complex and is significant to be able to use the goods in the intended manner, revenue should not be recognized until the installation is complete. However, in case the installation is simple, revenue is recognized. So they are telling whatever installation is there now, is it major component or small component? Now for TV, installation is major or smaller? Small, anyone, even we can only do it sometimes. But for lift, installation is, so wherever the installation component is a bigger item, they are telling wait until the installation gets over. If it is a small component like TV, no need to wait till installation happens. The moment you have sold the TV, book the revenue. Okay. Sale and repurchase agreement. Sale and reno. A sold the goods to B and B again sold it to A. This is called sale and repurchase. Which idiot will do that? Why will he sell it to B and again repurchase it from A? That means it is not a normal sale transaction. It is a finance transaction. Correct? No. When I sold goods from A to B, that guy B would have given me money. That is like loan taken. Again, when B sells it to A, then A gives back the money. It's like repayment of the loan along with interest. So it's not a sale transaction at all. It is if it is a genuine sale transaction, okay, then treat it as normal. But there are chances that there are some gotala in such transactions. Then such transaction should be treated as finance. So finance transaction, what I have to do? A sold the goods to B for 18 lakhs. Generally for sales, what is the entry? Bank account debit to sales account, 18 lakhs, 18 lakhs. Will you pass this entry? No, it's a finance transaction. Whatever money you got is not sales, it is like a loan. So entry that you have to pass is bank account debit to loan account, 5 lakhs, 5 lakhs. Because is it normal sale repurchase? No, there is a finance transaction under. So whatever you have received is loan. Aita? One more question. A sold it to B for 5. Later B sold it back to A at 6. Why? While again when he sells it back, I am giving him money, no? So I will give him 5 lakhs back along with interest. So 1 lakh is what? Interest. That 1 lakh should be treated as interest. Interest account debit to loan. Okay? So interest account debit to bank you do. No problem. Okay? 1 lakh, 1 lakh. All of you understood? Trade discounts, what will you do? Should be subtracted from the value of the revenue. 1 lakh is the price. You got discount of 1,000. So you'll recognize revenue at 99,000. Cash discounts, will you subtract it from revenue or show it as a separate income? Trade discounts is reduced from the sales value only. And like 1 lakh price andre, and trade discount 1,000 andre, will you show revenue of 1 lakh and expense of 1,000? No, no. Directly show revenue only at 99,000. But if it is cash discount, you cannot do it like that. No, cash discount is given at a later point of time. So you recognize 1 lakh revenue only. Cash discount will be treated as a separate expense in P&L. Okay. Then consignment sale. What is consignment? Consignor, consignee. Say suppose I want to. Right now I am in Karnataka. I have to expand my operations in Mumbai also. So there will be one agent. That guy is called consignee. I will send all the goods to him and he will sell the goods on behalf of me. Who has the risk and reward of the goods? In consignor, consignee. Still I only have the risk and reward. That guy is only my agent. He will sell the goods on behalf. If he sells it, whatever money he gets, no, out of that he will deduct his commission. Remaining money he will remit to us. Aste on agent iddange. Now whenever I send goods to consignee, should I recognize revenue? Hey, no. The moment I send it to consignee, he is nothing but my agent. So risk and reward is not transferred. Whenever I send goods to consignee, revenue cannot be recognized. Sir, consignee sold the goods to customers. At that point I can recognize the revenue. Whatever I have transferred to consignee, that I cannot recognize as a revenue. So these are all the special cases that you should know under AS9. Okay. Now you come to that question. Oh, bill and hold. Idadene. See the question. K Limited sold goods of 22 lakhs to Mr. Ravi Kumar on 1st February 2024. But at the request of the buyer, these goods were delivered on 10th April. K also sold 2 lakhs goods on approval on 1st January to Sheetal Enterprises. The period of approval is 3 months after which they were considered sold. Buyer sent disapproval for 25 goods and approval for 50% of the goods till 31st March 24. What is the amount that should be recognized as revenue as per AS9 as on 31st March 24? Tell me. First one we have bill and hold and rather delay. So 22 lakhs I have sent it to Ravi on 1st Feb only. But that guy told what? Sir, let it be here only, sir. I will take the delivery on 10th April. Can I book the revenue? Yes, no. What are the 3 conditions? It should be identified separately. It should be ready for delivery. And third, this delay should be requested by buyer. Here in our case, it is requested by buyer only. So 22 lakhs I can book it now only. So 22 lakhs done. Next. K Limited sold 2 lakhs on approval to Sheetal. The period of approval was 3 months, after which they were considered sold. Buyer sent disapproval for 25% of the goods and approval for 50% of the goods till 31st March 24. Ishtu entire 2 lakh I'll book. No, yenayitu. Within 31st March 24, for 25% he has sent a disapproval. So 25% mutakagala. Okay, remaining 75%. 75 lenagide. Approval for 50% of the goods he has given. So on 50% I can recognize. So out of 2 lakhs into 50% under 1 lakh I can recognize. 25% I cannot recognize, only disapproval. Aita. Remaining 25 what to do? When the period of approval mugada mele it is considered as sold. So when will the period of approval get over? I sold it on 1st Jan. 3 months ಅಂತಂದ್ರೆ it will get over on 31st March 24. ಅಂದ್ರೆ at the midnight of 31st March 24, ಅಂದ್ರೆ 1st April 24 morning ಗೆ 3 months has elapsed, I can recognize. We are as on 31st March 24. Is the period elapsed or not elapsed? 31st March 24 ಅಲ್ಲಿ ಇರುತ್ತಾನೆ ನಾವು. So period will elapse at the midnight. So technically period is not elapsed. On 25%, you cannot recognize the revenue. So 22 lakhs plus 22 lakhs I can recognize, no doubt. Plus here how much I can recognize? 1 lakh. So 23. So answer they have given A. Sorry. Answer they have given A. D. ICI shows it. Shows A. See, how come 23 lakh 50? The period of approval is 3 months after which they were considered sold. A, Noda, it's 23 lakhs only. How come it has taken 2350? Approval sale 2 lakhs, so 50% approved, 25% disapproved. Remaining 25%, 3 months expires on 31st March 24. It's not elapsed by 31st March 24. And they have recognized that. Now the ICA answer is A. That means I think their assumption. Enena? But I feel it is wrong. No, I feel still it is 23 lakhs. I feel ICA answer is wrong because 3 months gets over on 31st March 24. Adadmele first as on 1st April the 3 months is elapsed. As on 31st March the 3 months is not elapsed. But again it's again substance ಆಯ್ತಾ. ಅವ್ರ ಲೆಕ್ಕ ಏನಂದ್ರೆ ಆಯ್ತಪ್ಪ 31st March ವರೆಗೂ ಎಲಾಪ್ಸ್ ಆಗಿಲ್ಲ, 1st April ಹೆಂಗಿದ್ರು ನೆಕ್ಸ್ಟ್ ಪೀರಿಯಡ್ ಹೋಯ್ತಲ್ಲ ಅಲ್ವಾ, ಕರೆಕ್ಟ್? ನೋ, on 1st April at least it is recognizing andre, so you can bring it to 31st March only ಅನ್ನೋದೊಂದು ಲಾಜಿಕ್. So maybe under that logic the answer can be 23 lakh 50. Under assumption that if the period is not elapsed until 31st March, answer will be 23. If you think no sir 31st March got over, 3 months is elapsed, we can recognize the revenue antandre. See, one more way is 3 months is elapsed as on 31st March 24, recognize it anta andre at the end of 31st March 24 it got elapsed, that is one. So in that case the answer can be A. So basically what you have to understand, on 31st March 24 3 months has elapsed anta avaru tagondirodu, that's why the answer is 2350. Okay, what da next? Oh, fast we have to do. On 1st Jan 2024 HIL, again this question is asked in May 2025. On 1st Jan 2024 HIL sold 2 lakh strips of medicine to D Limited for 50 lakhs on 60 days of credit. Aito cost per strip was 20 rupees, that is total cost is 40 lakhs and the 2 lakh strips into 20 rupees. Okay, D Limited paid 20% of the amount due on 5th January. In March 24, D Limited is having significant cash inflow issues and is trying to raise funds through bank loan to run its operations. However, it is unable to do so and is unable to release payment to HIL on due date. Subsequent to this, it has gone under liquidation on 15th March. At the time when medicine was sold by HIL to D Limited, there was no reason for HIL to believe that it was unable to collect the sales proceeds. Adadmele liquidation go bittidare, nonsense. Based on the information, answer the question number 6. How the recognition of revenue from sales of medicine to D Limited will be done? Very simple. At that time uncertainty was there. No, that means what you have to do? Recognize the revenue. Later uncertainty came. Now what you have to do? Book a provision. See the answer. Revenue will be recognized for 50 lakhs. Subsequently, the unrealized amount of 40 will be debited to bad debts. Bad debts namel torsi. Revenue ne 10 madak hogbedi. Show revenue of 50 and separately book the loss 40. That's what we learned now. Because at the time of recognizing revenue, there was no uncertainty. September 2025, PYP. This you can only do, it's okay. I thought very simple question. We have done it in our materials also. I thought very simple. That it is based on the special cases and all that we have discussed. Okay. So done. So let's go to the next standard. Okay. Please remind me to share this. Aita. Next. AS 20 done, AS 12 done, 7, 9, 28 done. Which one next? AS 17 only will go, or AS ಎಲ್ಲ ಚಿಕ್ಕ ಚಿಕ್ಕದೇ ಹೇಳ್ಬೇಕಪ್ಪ ನನಗೆ. 22 ಕ್ರೇಜಿ. ನೋ 22 ಬೇಡ, ನಾಳೆಗೆ ಇಟ್ಕೊಳ್ಳೋಣ. We'll do 17. 17, 18 we'll try to finish. So AS 17, which talks about segment reporting, correct? It's a disclosure based standard. Under the standard will not talk about how much asset to recognize, how to do the subsequent measurement. It's all about disclosing the matter. Okay? It's all complete disclosure, what all you have to show. So basically, you know, so first of all, one thing about AS 17 you have to understand is, it is not completely applicable for MSME also and for SMC also, AS 17. Mandate, if it's an MSME or SMC, AS 17 is not applicable completely. Okay. Now basically what they are telling is, you'll be having one running business now, divided into two parts anta. Business segment, geographical segment anta. ಎರಡು segment ಆಗಿ ನಿಮ್ಮ business ನ divide ಮಾಡಬಹುದು ಅಂತ ಅವರು ಹೇಳ್ತಿದ್ದಾರೆ. Okay, let's understand what is business segment. Business segment is a distinguishable component of an enterprise that is engaged in providing an individual product, service, group of related products or service that is subject to risks and returns that are different from those of other. If I am an entity, I am into car division, I am into toys division, I am into stationery. Same entity, but I am into three segments which has different risk and return. No? Stationery, lesser risk. Maybe car, more risk. So they have to divide. Now these three things are different business segments because their risk and rewards are different. So these are business segments. So they are telling, divide your business into business segments. Okay. One more type of division that you can do is geographical segment. Now there are chances that I am the business. I am present not only in India, not only in Karnataka, in other states also. Not only in India, I am also present in other countries also. Now they are telling, now do the division based on geography. So which geographies? Geographies which has separate risk and rewards. Now India geography, risk and reward is different from Africa. Africa is different from Dubai. Dubai is different from USA. Now say suppose I have operations in all the four places. Now what is my geographical segments? India, Africa, Dubai, USA. So that became what? Geographical segment. Which geographies? Geographies which have different risk and returns. Now you have to go by the words. Did they tell border? Separate border? Did they say that? No. Geographies which has different risk and returns. That means, to make it geographical segment, nan bere countries alle irbeka? No. Say suppose I have 4 operations within Karnataka only. Aita? Can I still have different geographical segments? Yes. Say suppose one segment is there in rural and one segment is there in urban. The risk and returns of rural and urban is different. I can show two geographical segments. ಬೇರೆ ಬೇರೆ ಕಂಟ್ರಿಲಿ ಬೇರೆ ಬೇರೆ ಸ್ಟೇಟಲ್ಲಿ ಇರಬೇಕು ಅಂತಿಲ್ಲ. Okay? It is not on borders. It is based on risk and returns. Did you understand? So they are telling divide your business into business segment and geographical segment. Sir, both we have to show. Business segments also we have to show. Geographical segments we have to show. They have told. Aita? You have to make a selection. Primary segment anta barutte, secondary segment anta barutte. You have to disclose both, but here they have given you option to select. You can either make, and it's not your option, okay? It will be wrong if I say option. Now, both you have to disclose. You can make geographical segment as primary and business as secondary, or geographical as primary and business segment as secondary. ಎರಡು ತೋರಿಸಬೇಕು. But I have further bifurcation called as primary segment and secondary. ನೀವು either business segment ನ primary ಮಾಡ್ಕೋಬಹುದು or geographical ನ primary ಮಾಡ್ಕೋಬಹುದು. It is my option. No. It's not your option technically. What you have to do is, you have to see which information is giving better information for you. ಅಂದ್ರೆ ಈಗ ನಿಮ್ಮ ಎಂಟಿಟಿಗೆ if I give geographical segment based information, will that give more value addition? Or if I give business segment division, will that give more value addition? You have to see. ಆಯ್ತಾ? ನಿಮ್ಗೆ ಯಾವ ತರ ಕೊಟ್ರೆ ನೀವು ಡಿಸಿಷನ್ಸ್ ಬೆಟರ್ ತಗೋಬಹುದು. ಸರ್ ನನಗೆ ಜಾಗ್ರಫಿಕಲ್ ಕೊಟ್ರೆ ಡಿಸಿಷನ್ ಬೆಟರ್, ದೆನ್ ಯು ಮೇಕ್ ಯುವರ್ ಪ್ರೈಮರಿ ಸೆಗ್ಮೆಂಟ್ ಆಸ್ ಜಾಗ್ರಫಿ. ಸರ್ ನಮಗೆ ಬಿಸ್ನೆಸ್ ಸೆಗ್ಮೆಂಟ್ ಕೊಟ್ರೆ ಐ ಕ್ಯಾನ್ ಟೇಕ್ ಬೆಟರ್ ಡಿಸಿಷನ್ಸ್ ಫಾರ್ ಅವರ್ ಥಿಂಗ್, ದೆನ್ ಫಾರ್ ಯು ಪ್ರೈಮರಿ ಸೆಗ್ಮೆಂಟ್ ಇಸ್ business. I can do geography also, but you can do better decision making under business. So like that you have to make one primary and one secondary. Okay. Now let's understand what all we have to alug barakinta munche. So primary, secondary understood. Now whatever you decide as primary, no. Now say suppose I am a business. For me, business segment is the primary segment. I have to do more disclosures on business segment and very less disclosures on secondary and the geography. If I make my primary segment as geographical segment, that means I have to make more disclosures on geography and less disclosures on business. Aita? Says adenaru agirbodu. For any entity, primary can be geography also, business also. Okay sir, say suppose mine is business. Aita? I am continuing with the example. My primary segment is business. Sir, I have 5 segments, 5 business segments, car, soap, etc., etc. Sir, all the 5 segments I have to disclose. No, you have to disclose only reportable segments. Aita? Whatever classifies as reportable segments, you have to disclose. Sir, what is a reportable segment? See, to find out whether something is a reportable segment, we have some tests. Aita? First test is revenue test. If the segment revenue, andre the revenue that is made by the segment, if it is 10% or more of the total revenue, then it is called reportable. And they take your total revenue. Sir, what is our total revenue? Total revenue includes your sales that you have made to outside people and the sales that you have made to inter segments. Both will come under total revenue. Aita? Take that total revenue. And if your segment revenue, and this segment which we are talking about, if it has 10% or more, if it is 10% or more of the total revenue, then it is considered as reportable segment. First test. Sir, this test is not happening. Then you have one more. What is it? Asset test anta. Asset test andre no, if the total assets you have no in the enterprise, if your segment has 10% or more of the total assets, then it is considered as reportable segment. Sir, that also is not possible maybe. You have one more. Result test anta. Result andre no, it's profit. Segment result means it's segment revenue minus segment cost is equal to segment profit, also known as segment result. Okay, this is a little different. We'll understand with an example. Say suppose you have 6 segments, A, B, C, D, E, F. They've given you profit or loss. Aita? A has made a profit of 20, B 30, C loss of 10, D loss of 40, E 10 profit, F loss of 20. This is the situation. You have 6 segments. All these 6 are what? Business segments. Some segments have done profit, some segments have loss. How do you apply the result test? So what they are telling is, take all the positives one side and takes all the losses one side. What are the positives you have? 20, 30 and 10. Total comes to 60. It's all the positives, profits. Now take all the losses. 10, 40, 20. It is coming to 70. I know that 70 is a loss figure, but you have to consider it absolutely. And the positive ankonde consider madi. Which is higher of the two? Sir, 70 is loss, negative. It's okay. You consider it as absolute figure se togode. Which is greater? 70. 70 into 10% you take. How much you'll get? 7. Whichever segment has 7 or more, is 7 or more absolutely, that will be treated as reportable segment. So let's see. A is a reportable segment. B, C, so it's minus 10. It's okay. Consider absolutely. D, E, F, all are reportable. ಇಲ್ಲಿ ಯಾವ್ದಾದ್ರು ಒಂದು 6 ಇದ್ದಿದ್ರೆ that would not have been a reportable segment. Did you understand? All of you. Please consider the negative absolutely. ಅರ್ಥಾಗ್ತಿದೆಯಾ? Here also, sir, we have got 7, but C is minus 10. ಇಲ್ಲ. It is more than 7. Consider it absolutely. All of you. This is all the profit. This is all the loss. Understood? So that is result test. We have 3 tests. Even if it satisfies any one of the tests, that will be considered as reportable segment. Sir, I have one reportable segment. It has classified 2 tests. Shall I report it 2 times? Any one test if it satisfies, it is a reportable segment. Then we have management choice. Now management wants to disclose this. Sir, I know it is not a reportable segment. Its asset is less than 10%. Its revenue is less than 10%. Result allu barta illa. Result test allu it's not coming. But management wants to disclose it. Is it allowed? Yes. Good, no. More disclosure better for us only. Then you have some 75% test. Is 75% ಏನಂದ್ರೆ? Okay. Now say suppose this example only you take. Okay. They are telling, once you apply all the test, once you apply all the test, now you know what are all the reportable segments. Maybe out of all the 6, A, D, E are reportable segments. They are telling, you take the revenue of A, D and E. If the total external revenue attributable to reportable segments constitutes less than 75% of the total revenue. So they are telling, what all reportable segments you took? No. Take their external revenues. External revenue andrenu? Revenue that is earned by the segment by making the sales to outsiders, not to inter-segments only. You have to take external revenue. Add all the external revenue of the reportable segments. That should be more than or equal to 75% of the total revenue. Okay, na? Then if that is the case, chill, you are not supposed to do anything. You selected reported segments, 3 has come, but when you take up the external revenue, you add it, but it is not coming up to 75% of the total revenue. Say 100 is the total revenue, 75% is the 75 barbeku. But if you add the revenue, external revenue of your reportable segments, it's coming to only 65. But your 75% is coming at 75. Then what to do? Then they are telling, this should become 75. And they select one more segment. Sir, but that is not reportable. It's okay. You have to select some segment and make this 75% or more than 75%. Now A, D, E were reportable segments. Select F. Okay. Now see, did it become equal to 75%? Sir, no. Take A. Now it became, yes sir, it became 79. Good. Minimum it should touch 75. Did you understand? That is external test. Now let's come back to what all should I disclose. Now, say suppose my primary segment is business segment. What all should I disclose? See, they have told. If an enterprise disclose following for each reportable segment identified as primary. Now for primary, no, it's very simple. If you choose business segment as primary segment, then for each business segment you have to disclose all these items. Segment revenue, segment result, carrying amount of the assets that you have, carrying amount of liabilities that you have with that, in that segment. Then amount of expenses included in the segment result. How much is the depreciation and amortization that is coming to this segment, and all other significant non-cash items if you have to disclose that also. If you are a primary segment and you have selected business as primary, for all the business segments that you have, what all should you disclose? These things. If you have selected business as primary, then what becomes your secondary? Geography. So if for primary, what all should you disclose? All this. Aita? For secondary, what all should you disclose? Depends. If your primary format is business, then your secondary will be geography. If your primary is geography, then your secondary will be business. So they are telling, if primary format is business, then secondary will be geo. So what all should I do? Segment revenue from external customers by geographical area based on the geographical location for each segment whose revenue from the sales to external customers is 10% or more, and the total carrying amount or segment assets by geographical location if their segment assets are 10% or more. The total cost incurred for segment assets for each geographical segment if their segment assets are 10% or more. They are telling, now if your primary segment is business, your secondary segment is geographical, alva? Africa, India, Dubai. Now should I disclose about all the geography? No, they are telling, take this geography. Okay, if their revenue from external customers of Dubai is 10% or more of the total revenue, na? Yes sir. Then disclose the revenue. Aita? Then take the assets. Sir, their assets is 10% or more of the total assets. Then disclose the asset information also. Sir, it is not more than 10%. Don't disclose. Sir, USA? USC revenue is more than 10%. Disclose. So USA assets are more than 10% of the total assets. Disclose. As secondary segment. Sir, what to disclose? If they pass the revenue criteria, disclose revenue. If they pass the assets criteria, disclose assets. Understood? Then what is one more thing? The total cost that is incurred to acquire segment assets that are expected to use. Andre, how much money was spent on tangible and intangible assets, that also you disclose. So all the geographical segments are, no. If that particular geographical segment is exceeding 10% of the total assets, then disclose cost incurred on tangible and intangible assets also. Aita? That means two things came, simply. If your assets, say suppose you are Dubai, your total assets in Dubai is 10% or more of the total assets of the enterprise. What all will you disclose? You will disclose the segment assets that you have, and also you will disclose the cost incurred to buy tangible and intangible assets. Your revenue is more than 10% of the total revenue. Then you will disclose segment revenue from external customers also if your revenue is 10% or more of the total revenue. Understood? Aita sir, which revenue? Sales to external customers. Andre, external revenue is 10% or more of the enterprise revenue, total revenue. Did you understand? Second case where primary format is geographical and the secondary format will be business. In that case, should I disclose all the business? No. One small condition. See, there are two OR criteria. The first OR criteria is, see whether the external sales is 10% or more of the total sales. Yes or no? Nodi. Sir, no. Then see whether segment assets are 10% or more of the total assets. Sir, no. Yaradu illa. Andre, don't do anything. Okay. Sir, your assets is 10% or more of the total assets. Then what you have to disclose? Disclose segment revenue from external customers and segment to the external revenue. Total carrying amount of all the segment assets. And one more thing is the cost that you have incurred on tangible and intangible fixed assets. When will you disclose these three things for secondary business segment? When? One condition satisfied. What are the two out of one? Either your revenue should be more than, your external revenue should be more than 10%, or your asset should be more than 10%. If one condition satisfied, you have to disclose all the three. What are the three? External revenue of that segment, then carrying amount of all the assets of that segment, and total cost incurred by the segment to acquire tangible and intangible assets. Understood? So yeah, so we're done with AS 17. One more small thing, Andre. See, we are not completing everything fully, detailedly, okay. But whichever I feel is important, I will tell, okay. Now, when I say segment expense, okay, let's discuss one thing about segment expense. So come here. When I say segment expense, what all will come? What do you think segment expense is? All the expenses that is incurred for that segment is called a segment expense. What all will come? Any expense that is exclusively incurred for that segment, that is considered as segment expense. Say suppose there are some common overheads which is incurred for all the segments. If you can allocate it, if the relevant portion of the enterprise expense that can be, what happened? Off, the relevant portion of the enterprise, the relevant portion of the enterprise expense that can be allocated on a reasonable basis. Now there is some expenses which is incurred commonly, but if you can reasonably allocate it to each segment, that also will be considered as segment expense. Enter expense relating to transactions with other segments of the enterprises. Maybe you have purchased something from one of your segments only, and then there is A, B, C, D, nalak segments ಇದೆ. A segment has purchased something from D segment, so of course it would have paid something, so it has incurred some cost. That also will be considered as segment expense. Yes, okay, even if you have taken something from your own group segment, that also will be considered as expense. But what all will be not considered as expense is very important. If you have any extraordinary items as per AS5, that will not be considered as Papa. Pen is also tired. So extraordinary items as per AS5 will, what happened, man? So what all we cannot include in segment expense? Extraordinary items. You know, extraordinary items as per AS5. Abnormal things. Loss that has happened due to earthquake. That was what? Extraordinary item. So Antavella should not go to segment expense. Next, interest expense cannot go to segment. Now interest is what? Financing activity. So can you apportion interest expense as segment expense? No. Unless your business itself is financing. That is, are you a banker? Then consider interest as segment expense. If you are a normal entity like me, you are not a bank or financial entity, then interest cannot be considered as segment expense. It cannot be considered. This question is asked in our, this time RTP, May 26. Can interest be considered as segment expense? No. Losses on sale of investments or losses on extinguishment of debt. Maybe you have some loss on sale of investment. You had a liability of 5 lakhs, but you ended up paying 6 lakhs. What is that? Loss on extinguishment of liability. All this, can it go to segment expense? No. Income tax expense? No. It cannot be considered as segment expense. Sir, general admin overheads, head office, which is general, that general cannot be considered in segment expense. If you have an admin guy specifically for this segment, that you can consider as segment expense. If you have admin for overall, that guy cannot be taken. See, we learned this everywhere, no? In AS10 general admin overheads we cannot take. Specific we can take. AS2 same thing we learned. Same thing we are learning in AS17. If you have a separate guy as admin for this segment, that you can take. The general admin you cannot take. Head office expenses, so all the common expenses which is happening at head office level, those expenses can never be segment expense. So mainly income tax expense cannot come, extraordinary items cannot come, interest cannot come. Okay, then that loss on sale of investment, adela segment alla, other things tane. It's all investing activity. Segment is more focusing on operating activities. So that's why I'm removing finance activity effect also, investing activity effect also. ಅರ್ಥ ಆಯ್ತಾ? ಯಾಕಂದ್ರೆ ನಮಗೆ ಆಪರೇಷನ್ಸ್ ಬೇಕು. ಆ ಸೆಗ್ಮೆಂಟ್ ಎಷ್ಟು ಪರ್ಫಾರ್ಮ್ ಮಾಡ್ತಿದೆ ಇನ್ ಅವರ್ ಬಿಸ್ನೆಸ್, ದಟ್ ಐ ವಾಂಟ್. ಅಂಡರ್ಸ್ಟುಡಾ? ಸೊ ಓಕೆ. I don't think we have anything in AS17. Here we'll see. Oh. But it's also pretty simple. I think if you solve our study material questions, it should be more than sufficient. AS17, okay, very simple. So let's go to the next standard. So we are left with AS11, AS18, AS11, AS18, then AS22, AS29. Hey, 28 finished, no da? Nonsense. First thing that we did today. Impairment. Then we also have AS4, AS5. So AS4, AS5. AS3 will do it while we are doing financial statements. So that's okay. AS4, AS5. Then we have AS11, AS22, AS18, AS13, AS29. Innu ishtu ulkollatte. Okay. All small standards only. It's okay. Anyways, it's enough done for the day. We'll be able to manage it tomorrow. We still have tomorrow and day after tomorrow. So tomorrow also, on a conservative basis, say suppose we finish only standards. Still one day we'll be having for amalgamation, consolidation, schedule 3, branches, internal reconstruction. So for this 5 topics we'll be getting only one day. But what we are remaining with is actually all small standards only. For example, AS4, AS5, small. Then AS11 is also small. Yeah, I think we should be able to do it. If not, even if something, tension tagolad beda. We'll enter the 5th day, okay? And FM we will golimar, okay? FM you can manage now. I have only taken. Or it will happen once but by that time we'll be near to examination. So tell me what, should we organize FM or not? Madada? ನೀನು ಹಿಂಗೆ ಕುತ್ಕೊಂಡಿದ್ದ ಕಡೆ ಓದಂಗೆ ಆಗ್ಬಿಡುತ್ತಲ್ಲ. ಆಹಾ